of the claims that Russia has said. Do you view that as significant?
Indeed. So this week, there's a new round of face-to-face negotiations, 3 days, in fact, planned in Turkey, which is a pretty significant amount of time. Zelensky, interestingly, indicated over the weekend 2 important things. One is, again, stating that he would be open to Ukraine moving towards a neutral position, so renouncing their bid to join NATO, looking for other kinds of security guarantees from the West, but really crucially opting possibly for that neutral position. The other indication, which might be even trickier, though, was Zelensky seemed to signal some willingness to negotiate on the Donbass and on the eastern region. That territory question, I think, is going to be the hardest part for him right now. He's going into these negotiations very committed to territorial integrity. I don't think we'll see any real negotiations on territory until there's a ceasefire. So I think some of those will be compartmentalized. But that is really the area we need to see some movement to actually have this conflict have a negotiated settlement.
Over the weekend, Julie, there was a lot of strategy talking about how possibly there's going to be a demilitarized zone, something akin to what we see between North Korea and South Korea in that Donbass region. Do you see that as the likely outcome, as the likely best case outcome for this to actually get to some sort of resolution in the short term?
Well, there's all kinds of options on the table, and that's certainly one. Again, the first thing will be having some kind of ceasefire and then some kind of withdrawal of Russian troops. What is probably likely in the short term is that Russia is going to try and occupy as much of that region as possible and kind of have that occupation be a de facto situation for the short term with some of the negotiations ongoing. I think long term, Ukraine will be pushing for referendums in those areas, and particularly referendums on a district-based model rather than on the whole region, because some parts of the Donbass probably will vote on more of a Russian slant, but large populations within that region will not. So I'm imagining we'll see a referendum somewhere down the line.
A referendum of the entire nation is part of the negotiations, or a referendum ex-Crimea and ex-selected parts of Donbass and ex-up on the northeastern border with Russia?
We're hearing talks of both, Tom. I mean, most likely, I think we'll see a referendum on the Donbass and Donetsk and Luhansk, the 2 main areas there. But Zelensky himself is actually calling for a referendum for the people of Ukraine to accept this idea of neutrality. So that would be a nationwide one. But again, all this is just very much preliminary negotiations right now.
To your wheelhouse, Julie, the images we've seen, particularly Mariupol and the Black Sea, I believe it's terror, but you're the pro. Is it terror or is it just war?
It's a great question, Tom, and one that I would pose to my students. What we see in Mariupol is really a siege, and this is the kind of tactic that we've seen Russia use in the past, and really squeezing civilians. And in that sense, it is what I would see as a tactic of war that is targeting civilians, trying to inflict pain as possible to pressure to get the response that you want, which for many does fall into the category of terrorism. I would say, again, we've heard a lot about war crimes. Technically, under international humanitarian law, this kind of targeting of civilians is a violation of our Geneva Conventions and other international law frameworks. The terrorism question gets a little more tricky, but it's clear that civilians are suffering immensely in this conflict, and especially in Mariupol and those areas that are being targeted with this kind of siege tactic.
Julie, before we let you go, it would be great if you could weigh in on what we heard from President Biden over the weekend, whether it was a gaffe, whether it was a message, whether it has staying power. How significant is it that President Biden was perceived to call for the removal of Vladimir Putin, and then that it was attempted to be walked back, but it still left a stain?
Yeah, it was very notable. This is a moment when, again, the U.S. NATO allies are trying to de-escalate, are trying to keep these diplomatic and negotiated paths open. So Biden's comment really did escalate things even beyond his former words of war criminal and whatnot. And it's important because at this moment, it's when we know Putin feels threatened, potentially feels backed in a corner, and you don't want to give him further reason to lash out or to kind of feel desperate and take measures in that regard. With that said, I think Biden's statements are probably expressing what expressing a sense that many in the U.S. feel, but it's one at this moment of diplomacy, you cannot invoke a policy of regime change. It's not something that the U.S. is pushing for. It's not something that Biden personally should be pushing for. And it's something that right now complicates the battlefield, complicates negotiations, and also just complicates long-term relations between the U.S. and Russia. We'll probably see some kind of backlash on diplomats in Russia, and it just makes everything much more complicated in this very crucial moment that we're in.
Julie Norman of UCL. Julie, thank you so much. And Lisa, it overshadows all the other comments. Going into the weekend, the one that stood out for me, and you touched on it briefly, this quote: "Our forces will focus on the main thing, the complete liberation of Donbass." That came from the Russian military going into the weekend. That was seen by some as perhaps maybe a step back from some broader, bigger goals. And here we are talking about something else.
Right. The idea that perhaps even Russia wanted to de-escalate, and then that the West is actually the one adding to this escalation. Some people would argue, wasn't it Vladimir Putin who escalated to start with, given the fact that he invaded Ukraine? The issue is, and the Western allies agree, and frankly, even Vladimir Zelensky would agree, no one wants World War III. No one wants to see a nuclear altercation or something that is escalated. So if you have someone who is backed into a corner, how do you extract some sort of reasonable exit?
Yeah, just to be very careful, I don't take the position that you just laid out. Those comments from the Russian military, they said they weren't invading, they invaded. They said they weren't building troops up, they built troops up. Tom, they said they were going to take the troops back, they built them up some more. So every line we get out of the Russian government, it's not exactly something we can trust.
These are delicate issues. You know what, John? We're all getting used to this strange word war. That's what this is about. How long has it been since we've really seen this in the Western world?
Couldn't agree more, Tom. From New York City this morning, good morning with Tom Keene, Elisa Abramowitz and Jonathan Ferro for our audience worldwide. Heard on radio, seen on TV, this is Bloomberg.
Keeping you up to date with the news from around the world with the first word, I'm Lisa Mateo. Peace talks between Ukraine and Russia resumed this week in Turkey. There are still big differences on terms for a ceasefire. Meanwhile, Ukrainian authorities expect civilians to keep fleeing the devastated city of Mariupol, and humanitarian corridors will be opened in the northeastern part of the country. President Biden will propose what he calls the White House the billionaire minimum income tax. Now, it calls for a minimum 20% rate hike that would hit both the income and unrealized capital gains of households worth more than $100 million. Progressive lawmakers have complained that the tax code does little to tax the richest Americans. In China, the recovery of the second black box from the China Eastern crash gives investigators their best chance to find out why the Boeing 737 fell out of the sky. The flight data recorder has been sent to Beijing for analysis. Officials say some parts of the device are severely damaged. Shares of Tesla are higher in pre-market trading. The electric car maker will ask shareholders to vote at this year's annual meeting to authorize additional shares. That's in order to make a stock split possible. Tesla has been trading at over $1,000 a share. Walmart reportedly is ending cigarette sales in some U.S. stores. According to the Wall Street Journal, the move comes after years of debate with the chain's leadership ranks. A spokeswoman would not say how many locations will keep selling cigarettes. She told the Journal Walmart is not halting all tobacco sales. Global news 24 hours a day on air and on Bloomberg Quick Take, powered more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Ukraine rages on.
They will be putting the issue of Ukrainian statehood in question.
What is happening is a genocide of Ukrainians.
Ukraine will never be a victory for Putin.
Putin must fail.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
1.2 million people have crossed over from Ukraine into Poland.
The fastest growing refugee crisis since World War II.
The latest target, a children's hospital and maternity ward.
Putin has gone all in.
And analysis of what it all means to you.
The corporate exodus continues.
To continue the pressure on the Kremlin.
We could see an energy blockade. That would have a massive and devastating impact on the German economy.
For every dollar the United States could lose with the sanctions, the European Union stands to lose 10.
The world has a food security problem already, a huge one.
The Russia-Ukraine invasion is going to be worse for global poverty than the pandemic has been.
I think we're in for a long slog.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio. A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
There's no demand coming out of Asia, or very limited. We're worried about real income growth coming off. Markets are challenging the Fed. Central bankers, how much do you want to push this right now before you find out that you've already done too much and it's already too late?
Jeff Yu, the brilliant Jeff Yu of BNY Mellon there from New York City this morning. Good morning. Here's the price action. Futures on the S&P 500 basically unchanged. Negative 0.1% on the NASDAQ 100. Yields higher by a couple of basis points on a 10-year Treasury. A whole lot more on a 2-year. The curve's flatter. 248.99 on a 10-year after breaching 250. Dollar yen breached 125 overnight. Tom, we have had a 7.8% move this month alone on dollar yen. Just a monster move, TK.
On dollar yen, and of course the pros take it out to standard deviations from the bottom. I believe it was March 4. It's a 4.5 standard deviation move from -2 way up plus 2.5. That's a big move. To provide perspective, Enda Curran, our chief Asia economics correspondent, I would say Enda, suddenly Japan, except you and I know it's been a zombie economy. Nominal GDP now is right where it was in the summer of 1994. They've gone nowhere. How do they escape this time if the global regime is to higher rates and lower debt prices?
Well, it has been a while, Tom, since the yen was making headlines like this, that's for sure. I think what a lot of people today are saying is it just goes to show the Fed impact now on the rest of the world, certainly East Asia. Japan is really diverging, as is China. We saw the reaction in the bond market today with that big sell-off. The Bank of Japan come in with unlimited buying of 10 years, and that's just reinforcing that they are going nowhere away from their economy. They're continuing.
Bit of a connection problem there, TK.
Enda froze up.
With Enda Curran.
There he is. Enda, you there?
Back. Carry on, Tom.
Let me continue on. And John authors with a wonderful essay, and he goes right to the heart of the matter, which is their manufacturing capability, and their goods inflation is tangible. It's not a comfortable disinflation or outright deflation. Toyota and Nissan have the same inflation Siemens and BMW have in Germany. How do they pull that off?
Well, look, remember, Japan's supply chain is both regionalized and globalized. And I mean, they won't necessarily benefit from the cheaper yuan. They might suggest on a headline basis, given how much of their production is also based in other parts of the world. But I think, Tom, also remember, Japan is importing the worst kind of inflation at the moment. Remember, we know the BOJ has been wanting inflation to get up to 2% level, but this is not demand-style inflation that they are going to be importing. This is why the Bank of Japan are saying, look, we're looking through whatever price pressures do come in here, because that's not what we're trying to achieve. It's all about, of course, trying to get consumer spending back up, get wages back up, and get the demand side of inflation back to where it was. So, you know, on the surface, you could say there's a dividend for Japan from the weaker currency in some respects, but I think a lot of people are saying that really it doesn't change the game for the Bank of Japan, doesn't change the game for the stimulus story, and it's not really the kind of inflation that Japan wants at the moment.
Meanwhile, Japan is not exactly the center of the global economy the way perhaps it was 20 years ago or 30 years ago. China, however, is. And we're looking at lockdowns in Shanghai as they try to test everybody systematically to get ahead of the COVID outbreak. How much will this crimp the economic output this year?
It's a bit like what they were talking about in Hong Kong a few weeks ago, Lisa. They're basically cordoning off certain parts of the city to see if they can kind of slow down the spread. Look, it's going to be a big hit. It's the biggest city economically. The obvious impact is on consumer sentiment. I mean, if you're locking down a city like Shanghai, big international financial center, what does that say about the spread in the rest of the country? So you've got the consumer sentiment side of it there. Secondly, it reinforces China isn't giving up on this COVID zero approach just yet. We know, of course, they want to keep it under control ahead of the big political congress at the end of the year, and this is reinforcing it. There was a lockdown in Shenzhen a few weeks ago, similarly. Thirdly, of course, we have to keep an eye on what happens at the port. Shanghai is the world's biggest port. Is there going to be a spillover on logistics there? Will there be a spillover even on the production side of it? Tesla already talking about some disruption to its production today. Now, there is a view that China is trying to bubble off the factories and bubble off the production side of the economy in a way that they did with the Winter Olympics and try and minimize the supply side disruption. But you have to say, given how transmissible this variant is, BA2 of Omicron, that's obviously going to be a tough task. So it all stacks up to a hard task for China to keep this virus under control, and of course, more pressure on them to hit that 5.5% growth target, which is already quite ambitious anyway.
And this is a delicate question. I know you're in Hong Kong. There are reports of traders sleeping at their desks, bringing in sleeping bags as they prepare for some sort of lockdown there. How much have you seen the shift out of Hong Kong to perhaps Singapore or other Asian regions in order to get ahead of the increasing lockdowns mixed with the increasing control from mainland?
There is a shift. There's certainly a shift over Hong Kong on a personnel level. Lisa, people are leaving Hong Kong to work for either multinational companies or international banks or investment houses. They are leaving. We do know some multinational corporation companies are leaving Hong Kong, some to go directly into the mainland, but Singapore is definitely benefiting from it as well. The capital flow story, Hong Kong still does retain that core business model, though, as a place to do business. I mean, China's closed capital account means this is the money box for China. This is where you come to trade and buy your stocks and settle them. So Hong Kong is still playing a key role in that. But to your point, there absolutely is an exodus of personnel. There is a departure of both companies and banking services going with that. And a lot of people here, including chambers of commerce, are warning that's only going to get worse unless China can square up its COVID zero policy, and Hong Kong likewise, and start adjusting to living with the virus in the near term.
And just quickly, like in Europe, we throw around this line lockdown, and then it turned out to be lockdown light compared to what it was in early 2020. What are these lockdowns like?
Quite right. So, John, lockdown has become shorthand for a whole range of things. So, I mean, in Hong Kong, for example, we're under quite severe restrictions here at the moment and have been for many months. But on paper, you probably wouldn't call it lockdown because we're allowed to leave our apartment, for example. Shanghai, now what they have gone to this week, at least in Pudong anyway, is that they are not allowed to leave their apartment. So that is a fairly stringent lockdown, I would say, by anyone's measure. I think the benchmark people look to is Wuhan, where you seal off a whole province. There are those who are saying we're not yet on that scale. But what we are seeing, though, is rolling disruption right across China, be it, city regional lockdowns within a city, or be it quite severe restrictions on mobility. I mean, you can slice and dice it any way you want, but the point is it is disruptive, it is weighing on consumer sentiment, and by extension it is dragging on the broader economy. And that's as true here in Hong Kong as it is across China as well. So, you know, we can split the difference on the semantics, John, but the restrictions on trying to control the virus remain quite aggressive.
And wonderful as always, buddy. It's good to catch up. And Curran there of Bloomberg. Bramo, do you think that plays into the crude move this morning? Crude down 4 percentage points on Brent and WTI.
That's what a lot of people are speculating, that this just further cools the global demand if you have this major engine of growth that's hampered by ongoing shutdowns. However you want to define them, people staying home, it's going to have a material impact on global trade and, frankly, demand.
To borrow Lisa's words this morning, Tom, crude down for the wrong reasons, perhaps this morning.
Yeah, that's well said. I think that's very, very important. I'm looking at diesel again, as I mentioned on Friday.
115.86 on Brent crude. From New York, much more still to come on the bond market as we get some curve inversion and a little bit more curve inversion in the Treasury market. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Markets are challenging the Fed. Central bankers, how much do you want to push this right now?
If inflation runs away from the Fed even more than it is now, we're all a lot worse off.
Higher inflation has generally basically been neutral because it's been passed on.
There is a huge question mark over how the household sector responds to the surge in food and energy prices.
The Fed can bring down inflation without harming growth or the labor market, but it is admittedly narrow.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York City for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures on the S&P slightly positive. TK, the headlines are in the Treasury market.
The headlines are in the Treasury market and correlated in foreign exchange. And what this is about, folks, is the rate of change and the rate of change of the rate of change. Out of controls, maybe a little forced, John, but this is an important Monday for the markets, and what it signals is a Fed on the move.
It's a major mount up and a two-year yield, the front end making a major move, and the spread between 2s and 10s getting narrower and narrower. Does the Fed make a major move in the next couple of months, TK? And does the payrolls report on Friday validate that effort?
Well, I'm really glad you bring this up. It's April 1, folks, is a jobs report. Come on, it's always supposed to be 3, 4, 5, even into April 8. No, an early report this month, John, and it's going to be really important if it describes a fully employed America in a relatively good economy.
Or does any of this data start to speak to consumer confidence, Lisa, which is rock bottom? We saw it again on Friday.
And frankly, the line out of some of the bulls has been, watch what they do, not what they say. They might not feel good, but they're still going out and buying. Is that really still the case? We saw retail sales come in weaker than expected. People are starting to say that they are going to delay big purchases of certain items. How much does it start to feed into the data? And we're all looking for that in what we get this week.
Bramo's asking a big question, TK. Does the consumer pull back given where inflation is printing month after month after month after month in this economy?
I do not share that gloom, but I do share the idea that economic growth is paramount given these financial dynamics, and that's what you see in Japan. That's what you see in Europe. John, the Russian headlines out over the last 2 hours showing those dynamics. We're going to get all these micro data points that give us a measurement of real and nominal GDP.
You know, Lisa's itching to get back in here
yes,
and get back at you.
Well, honestly, I mean, I understand that everyone portrays me as gloomy, right? And I'm not coming out and saying everybody should just get rid of everything and hide in a bunker, right? The whole point, though, is if you have 20% of household budgets, it's food and energy. If you have 20% or more of household budgets that are mortgage payments or rent, and you start to see those, all of those inputs increase dramatically, then yeah, people will have less money to spend elsewhere. And we are already seeing that borne out in the data. It is not gloom, it is fact. That's my point.
I'm sorry, she's fired up. She'd slap me if we were in the same room together. I mean, that's all there is to it. John, John, look, it's a very interesting debate, and what I know is when you get a seismic change in markets like we have, it affects different deciles of the public differently. We forget that.
Did you all hear that? That massive sigh of relief that you don't have to get in a bunker and hide away. Thank you for clarifying that, Lisa. That was important. Futures unchanged on the S&P, on the Nasdaq. We're unchanged as well.
I'm going to get to
the bond market. Yield up by a basis point on 10s. This is why Tom and Lisa are separated by about 50p. 248.25 on a 10-year right now, and crude pulling back. Lisa's been on top of this move. Crude down by 4.8%. Lisa 108.42.
Yeah, although still markedly higher than it was a month ago, which is what a lot of people are watching. We hear from a slew of Fed speakers today who are going to be speaking about this backdrop of the consumer, about the demand that has been too resilient for them. That's basically been the message. We've got Fed speakers, including Fed Governor Chris Waller, New York Fed President John Williams, San Francisco Fed President Mary Daly, Richmond Fed President Thomas Barkin. That's all just today. How much do they address this yield curve inversion that we see almost across the entire space? We're on watch for the 210s, the 530s, inverting for the first time going back to 2006. Do they care, or do they want to see this in order to crimp demand? Today we get a number of Treasury auctions, including $50 billion of two-year notes. That's going to be at 11:30 a.m. and $51 billion of 10-year notes. That comes at 1 p.m. Two-year notes are really interesting to me. We have seen this dramatic shift. People were saying it's not where we go, it's how quickly we get there. Well, we've gotten both. And still, we see the risk assets holding in, which goes back to this whole resilience of the consumer point, which is the reason why I'm so focused on it. And at 2:45 p.m., President Biden is announcing his budget for fiscal year 2023. It's going to be all about reducing the deficit. It's going to be, of course, about what is not being called the billionaire tax, but everybody will call the billionaire tax, a tax on ultra-wealthy individuals. How much do we offset some of the increased outlays, and how much focus is there on mitigating the next downturn, especially given the fact that the Federal Reserve is not going to have all that ammunition, albeit they might actually hike that much and then maybe drop rates down. But how much does that become the discussion, John?
Lisa, thank you. Let's keep it on the President of the United States. A week of diplomacy, days of hard work in Brussels, in Poland, all drowned out by one line from the President.
For God's sake, this man cannot remain in power.
It was billed as the most significant speech of Biden's presidency for the best part of 5 minutes, and then the walk back kicked in.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
Team coverage starts right now with Bloomberg's Anne-Marie Hordern in Warsaw, Maria Tadeo in Berlin. AMH, let's start here. Did he mean it? Did he not mean it? What does the walk back look like right now?
Well, we're not really sure exactly what the president meant, Jonathan, but this was clearly unscripted. These 9 words at the end of a Hallmark speech that ran for about 25 minutes. It got a ton of crowd applause and cheers when he mentioned NATO, humanitarian aid, and the likes, but the entire speech has been overshadowed when he said this man, President Vladimir Vladimirovich Putin, should not remain in power. Was he just exasperated at the moment of everything that was going on? He had met with refugees earlier in the day, face to face, and in that moment, he has well told reporters that he thought President Putin was a, quote, butcher. Now you have the walk back. The White House has been working overtime over the weekend. Immediately since he said those words, we heard from Secretary of State Antony Blinken, and even the president himself, leaving church, was asked, do you think, is this what you meant about regime change for the United States and their position at the Kremlin and in Russia? And he gave a frank no. But clearly, this is potentially what the president thinks personally.
Maria Tadeo, you're in Berlin. Explain to me the axis right now between, bad choice of words. Explain to me the dynamic between Germany and Brussels right now after the president's trip.
Tom, I think for many is disbelief and disappointment. For many was the sad ending of a trip, that was going very well, and it completely overshadowed everything that was accomplished at NATO, and it completely overshadowed the message that came out of the European summit on Friday. Remember, the whole thing about this trip was to put the focus on unity and speaking with the same voice, and in particular when you speak to officials in Brussels, but also the French president, very vocal about this, saying what is the point of using this language? At this point, what we want to do is get a ceasefire, pull the troops back, and stop this war. If you call Vladimir Putin a butcher and you also suggest that you want him removed from power, it plays directly into Russian propaganda. We have to stay very clear-eyed and very cool-headed. So overall, I would say in all the major cities and capitals in Europe, there was this idea that this was a very bad mistake, that this sentence took away everything that was accomplished over a week of monster diplomacy.
Maria, let's talk about what was accomplished, including, for example, the agreement that the EU and U.S. came to supply some liquefied natural gas. How significant does that go toward independence from Russian supplies?
Yeah, and you know, we had this big LNG deal. It would neutralize, and again, just to remind you that this is just a fraction of the gas that comes in through pipeline into the European Union. But of course, the EU built this as the beginning of a new friendship between the United States and the European Union when it comes to gas and energy independence. The German Chancellor also said, we are moving away from Russia, and this won't be turned back. This is irreversible. We're not going to go back to the old status quo. When you look also at the humanitarian angle of this, you had Emmanuel Macron announce on Friday a mission by the Greeks, the Turks, and the French together to try to get people in Mariupol. Just a year ago, if you know the tensions between the Turkish government, the Greek government, and Erdogan and Emmanuel Macron, this would have been unthinkable. But it does show that at this point, the humanitarian angle is something that is uniting Europeans. And it goes back to my earlier point. A lot of this, of course, was overshadowed by this debate that we're having today as to whether or not the United States wants Vladimir Putin out of power. And for Europeans, they still stress this plays directly into the Russian propaganda that this is not about Ukraine, is not about the people of Ukraine, that this is about getting Vladimir Putin out of power.
Maria, before we go, you're actually in Berlin today, not Brussels, and for good reason. You're sitting down with a German finance minister. Now, Maria, can you tell me what subjects, what topics you're really going to be hitting on this afternoon?
Yeah, well, this is a conversation that we are going to have with Christian Lindner. Of course, he wants to talk about the stimulus program that will be needed for not just Germany, but also the European Union. The question is whether or not we get something that looks like the pandemic stimulus program. He also says at this point, and a lot of this, of course, is damage control from Germany, that Germany wants to lead a Marshall Plan for Ukraine and this country that was destroyed after the Second World War. That is a very emotive language to use. And Germany says they want to lead this effort to reconstruct the country. And then, of course, the other big issue is energy. You could argue Germany made a fundamental mistake over the past 10 years where it believed that security and energy were separate, that the politics and the trade were separate. For this government, it has been a wake-up call that in many ways energy is security and it is defense.
What a moment. Maria, really looking forward to this. Fantastic. Maria Tadeo and Anne-Marie Hordern. Maria Tadeo, Tom, sitting down with a German finance minister, a fireside chat, an exclusive conversation a little bit later, the highlights of which we'll bring you as soon as that wraps up.
I'm looking at a German 2-year positive, 20-year Swiss positive, 10-year yield. The German negative 0.099. John, it's a tipping point, if you will, for German finance.
We started this conversation, Lisa, with U.S. consumer confidence absolutely rolling over, decade lows. German business confidence, the IFO, collapsing last week. German business confidence really, really weak.
And this comes as we see that inflationary pressure, as they are reliant on Russian oil and they are reliant on Russian gas. How do they move away from that quickly enough to really offset this at a time when the consumers are reaching their breaking point?
There is a lot going on in this bond market, so we'll keep you up to speed on it. We're going to be catching up with Matt Dizok of Merrill a little bit later on this morning. Yields on 10s just short of 250 now, 247. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden is trying to clarify his stunning comment that Vladimir Putin should be removed from office. He says he was not calling for regime change. European allies raise concerns about the president's remarks, and critics say he was further inflaming tension with Russia. Russia's oil exports fell 26% from the week before. Moscow is facing a growing movement by many of its usual customers to find alternate energy supplies after the invasion of Ukraine. Only a handful of nations have imposed explicit embargoes on imports of Russian oil. The U.S. says the revival of a nuclear deal with Iran may not happen. Iran has made a number of requests recently, including that Washington removes the Islamic Revolutionary Guard Corps from its list of terrorist organizations. The U.S. is reassuring the political costs of reviving the 2015 pact. Now, the agreement limited Iran's nuclear activities in return for sanctions relief, including on oil exports. President Biden will propose what the White House calls the billionaire minimum income tax. It calls for a minimum 20% tax rate that would hit both the income and unrealized capital gains of households worth more than $100 million. Progressive lawmakers have complained that the tax code does little to tax the richest Americans. And a stunning moment at the Oscars. Actor Will Smith slapped presenter Chris Rock and was later awarded the Oscar for Best Actor. Now, Rock had joked with Smith's wife, Jada Pinkett Smith, could be in the next G.I. Jane movie. And that was a reference to her very short hair. She has alopecia, a disease which causes hair loss. Will Smith later apologized, but didn't mention Rock. I'm Lisa Mateo. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Tuesday, Bloomberg Technology is live from the Shop Talk Conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
I think the President, the White House, made the point last night that, quite simply, President Putin cannot be empowered to wage war or engage in aggression against Ukraine or anyone else. As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
Antony Blinken there with some clarifying remarks after the president's comments over the weekend. The US Secretary of State. Futures positive 0.1% on the S&P 500, on the Nasdaq up a little more than 0.1% as well. In the bond market, things fade quickly, actually. Your 10-year yield is not higher, it's lower by a basis point. Your 2-year is back down to 230. The high of the session was 240 and very close to 241. So the picture changes quite quickly, Tom. On 2s, 10s as well, we get back up to about 16 basis points. The spread between the two got as low as 9 a little bit earlier on.
Something really scientific, John. You look at the blinky of the screen. We've all got our different launch pads. Lisa's is smarter than mine. And the answer is you see the red and green blink. And I would suggest, John, on a Monday, it's a very active screen.
Yeah, and this bond market's been all over the place, Tom.
Yeah.
From 1 minute to the next, and that's been true of this morning as well.
The real yield coming in a lesser negative yield. Right now, maybe your most important conversation of the day. We're fixated on yield. We're fixated on bond price. Sarah Hunt looks at equities, portfolio manager, Alpine Woods Capital Investors. One measure I have, Sarah, of bond price is back to a price of 2009. It can be the idea of an ETF, a given bond market ETF that's, I don't know if it's a bear market, but it's a pretty ugly number, negative 11% on price. And yet equities are resilient. Is it just money choosing? Is it flow from fixed income to equity?
I think it's the same problem that we've been seeing since 2009, when you've had interest rates at such historic lows. And I think that this fast move in the bond market and yields has caught people a little bit off guard. And I think that there is some belief that equities have more safety in them because you've got more growth in equities than you have potentially in the economy. And I think that it's very difficult when bonds have more volatility than some of the things that are supposed to be volatile, like Bitcoin, which you were discussing earlier. And this move is just taking people, I think, very much by surprise.
Do you have a gauge of the revenue line of the corporations you follow, the ones you like, the ones you hold, the ones you sell? And is the misestimation here that nominal GDP will give us better revenue growth than anybody cares to admit?
I think that part of the upside to inflation in people's minds is that, yes, you will have an inflation in revenues. I think what is not being thought about as deeply is what that does to margins and what that does to the costs on the other side. In the beginning, you have higher prices, but you don't have those costs catching up. As those costs start to catch up, then it becomes a much more difficult balance between, can I keep my margins and still be raising my revenue lines or not? And I think that's where in the near term, the equities have the advantage, but I think that there is some question as to how all of these input costs, which are not going to be as easy to fix as people are hoping, come down. And that includes the energy price, which is a big part of what's going on here that's going to flow through to a lot of other things besides just energy prices themselves.
So just drilling down into the granularity of markets and frankly equities more broadly, how much can you bet on consumer discretionaries at a time like this?
I have to say, I'm sorry, gentlemen, but I'm in Camp Lisa on this one. I am very concerned that all these higher prices are going to lead to different spending choices and for people to pull back a little bit and to worry that they are going to not have enough money to deal with things like higher energy price bills, higher heating bills, higher cooling bills in the summer, and higher food prices. So I do think that it makes people more cautious about what they spend. You've got the conflicting aspect of coming out of the pandemic, which we're still trying to do. So there's also a little bit of excitement to both spend and travel. So those are competing forces at the moment.
Right.
But if you don't have some changes longer term in energy prices, I think that really does affect consumer psychology.
And John, what's important here is we all know Camp Lisa's a lot like Total Drama Island.
I don't know if you want to actually go to Camp Lisa.
The swim test alone is enough to kill you, let alone the black flies.
Camp Lisa is not a place you might not want to go to. I mean, Lisa, what happens at Camp Lisa? What goes on there?
You just, walk around feeling kind of gloomy. No, in all honesty, what you do is you look at the data, getting back to this point, Sarah, that you're raising, and I want to get a little bit closer to it. This idea of not wanting to go into consumer discretionaries at a time of pressure on some of these households, what counts as discretionary? Is it an Apple phone? Is it an iPhone? Is it an Apple Watch? Is it, some of the basic mainstays of households that cost a lot and used to be discretionary, but perhaps no longer are?
So I would argue that something like Apple went from being, I agree, discretionary to something. Can you imagine when you leave your house without your phone by accident? It feels like it's like something terrible has happened. So I'm not sure that counts as much as discretionary as on the margin, people doing more on the both travel and entertainment side. Maybe you put something off for a little while longer. Even though you're excited to travel, maybe you only take one trip instead of two, depending on what's going on with COVID. And that's another thing that's still problematic. Look at China. You're seeing oil backing down today, partially on the back of the fact that China is once again having issues and is trying to curtail COVID by shutting things down. I think that there is so much going on right now. It is very difficult to parse each and every piece, but ultimately we still have the problem of all the factors have moved towards a higher energy price and higher food prices. That is going to be tough for consumers. However you define discretionary, it's still going to be a problem.
I cannot keep up with this market at the moment. Sarah, thank you. Sarah Hunt of Alpine Woods Capital Investors as she ducks out the way and heads towards Camp Lisa.
Camp Lisa, it's a really exciting
You have to sort of burrow underground.
Do you know the breakfast there, John? Did you have this in England where you get the little Cheerios box and you cut the box open and put the milk in and it's powdered milk because you went to Camp Lisa?
Is that what they do there, Tom?
Yeah, that's what they do
I have
there.
actually
When you just
used
pour it out into a bowl.
Yeah, Lisa knows.
No, actually, a lot of those little boxes you can open up so that you can pour the milk in.
I
They're
never
actually
did that.
designed to do that.
They were designed to do that? I didn't know that.
It's inadvisable.
Okay,
It's
I
only
won't do
done
that. Can we
in
talk about the
extreme
range in this
situations.
bond
Please, let's do
market?
that. Yes.
125, the low of the month on a 2-year. We had 240 this morning, so that's the range on the month. Let's talk about the range on the session. The low 226.75, the high 240.80. And right now somewhere in between. So as this move in the bond market fades a little bit over the last hour, you get the equity market push up a bit more. So up 0.2% on the S&P in Europe, Tom. On the Euro Stoxx 50, up 1.9%. So a nice rally picking up over on the continent.
You know, it's a correlated mess. And that's what you have, frankly, in a war, but also within the regime change. John, it's real simple. The Bloomberg Total Return series, logarithmic, hasn't broken a given moving average in 40 years. We did that last week.
Lisa, you said you're focused on the data. Is this week's data about whether we need to move 50 or whether we shouldn't move 50? Is it the latter more than the former?
Or is it about whether or not to buy certain slices of the equity market as the consumer faces some of these headwinds?
Futures up 0.2%. Still thinking about Camp Lisa, TK.
Getting depressed.
She's brutal at tug of war.
If you do any kind of business in this country, there's a pretty good chance that you're going to see that business registered in Delaware. Why? Because that's where you do it. And our point was Wyoming can be that venue for blockchain enterprise, for crypto.
It's not the Wyoming way to sit around and wait for change. We want that independence, we want that freedom, we want that individuality. And that's a common theme that brings together bipartisan support for this in Wyoming.
We want to make sure that people understand, especially in Wyoming, but as the United States as a whole, this trend is coming. It's not going to stop. This is more of a small town that's growing into what I would call the cryptocurrency version of Silicon Valley.
It's the philosophy of that rugged individualism, the independence, and the ability to really get things done for yourself and control your own destiny. You get that from a blockchain, and you don't get that without it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
I think we're all looking at the same thing, the relationship between the equity market and the bond market, and asking ourselves if there is one. The equity market right now up 0.2% on the S&P, on the Nasdaq too. On the month so far, up almost 4 percentage points on the S&P 500, even with this monster move in the bond market. Your 2-year yield, the low of the month for March, 125.93. It came on the first trading day of the month of March. Look at it now, 230, 213, and very close to just breaching 240 and running away earlier this morning. That's a massive turnaround on twos. At one point today, we had the 3-year, the 5-year, the 7-year, all trading above the 10-year and the 30-year yield. That inversion starting to pick up and then backing away, which explains maybe some of the lift we're seeing in the equity market at the moment, just pushing a little bit higher, a little bit firmer compared to where we were maybe an hour or so ago. So we think we know what the Federal Reserve may or may not do in the next 6 months. We'll find out if that's true. We also know, we think we know, what the BOJ will not do, and that's get involved in this rate hiking cycle. And to see dollar yen make the move it made earlier today, Tom, through 125, unreal. Just short of that level now, 123.99. This month, this currency pair up by 7 to 8 percentage points in a single month. That's a major move in the FX market.
It's weaker yen, John, and I looked at a bunch of trade-weighted series today, and it's not quite through to record trade-weighted weakness on yen, but we're getting there very much. And what I would suggest, John, is a lot of the tensions you see in Japan model back to the early 1990s.
And what's amazing about this, Bramo, is that the Federal Reserve is engineering higher interest rates, higher yields, essentially, and the Bank of Japan it's not tolerating it. And if anything, it's trying to cap them.
Yeah.
To keep them down as the rest of the global bond market sells off.
It's actively moving in the other direction. The other thing is the ECB is concerned about the weakness in the euro for a second versus the dollar. Is the Bank of Japan, do they care about this kind of weakness because it imports inflation? Or is it actually going to increase some of the exports?
It's what they've been looking for a long time, right? They've been trying to buy some inflation.
Well,
dollar yen might help them get them there. Just short of 125 after breaching that level for the first time in 7 years earlier today. Some big moves, cross-asset. That's your cross-asset price action. Some single names now. Let's say good morning to Katie Lyons. Hi, Katie.
Hey, John. Well, some big moves on the individual stock level as well. One of the main stories of this morning is Tesla. The shares are up nearly 6% in early hours after the company said it will ask shareholders at its annual meeting to authorize issuing more shares for a stock split. Remember the last time Tesla split its stock? August 2020, and it did really well in the run-up to it. And following that, stock trading at 1,067 this morning. But of course, that actually came after news over the weekend that Tesla had to shut down its factory in Shanghai until April 1st due to the partial closure of that city because of the COVID outbreak. But clearly, the share split news giving a little lift to that stock today. Speaking of production-related issues, wanted to point to Apple. Nikkei reporting overnight that it is cutting its production of the iPhone SE next quarter by 20% due to demand challenges. That stock is down 1%, but it's dragging more so on some of its suppliers like Qorvo. That stock down 3.4%, though a bit of a double whammy there because it was also downgraded by Goldman Sachs this morning. Finally, just a quick check on some stocks that are moving in tandem with other assets. We have oil moving lower today, but Bitcoin moving higher. And with that move, Coinbase is up by about 4.4%, a lift for crypto-related stocks really across the board, but it is downward pressure for energy stocks. Occidental and ExxonMobil down 2.5% and 1.5% respectively, Tom.
Kaylee, thanks so much. A small deal, but for those of a certain vintage, a name from another time and place. Long ago, there was Plantronics, and it was a glory of a small cap stock from $3 up to $77 and down, John, just a complete debacle to $26. A takeout this morning, all cash, HP, $40 per share. Dave Schul looks like a genius.
What do they do, Tom?
They do headphones. They do stuff like that.
Are they good headphones?
I don't. No, they're not like those kind of headphones. I mean, you know, you're not listening.
They're like at your desk headphones.
Yeah, they're not like when you listen to Tyler the Creator. They're not like that. They're like when you're like, hello, line 2.
They've got
John
a speaker
Farrow's on line 2. Yeah, that kind of thing.
Right, that thing.
Okay, we'll move on
Thanks
from
for
that. But that's
that.
an interesting story there. The only one that understands what I'm talking about is Terry Weissman, who remembers this at Bear Stearns years ago, not on Plantronics, but on interest rates and currencies. Terry, I am honored you are on today, and I want to link it right into Macquarie, which is Aussie yen. When we move like we move, things happen. What should we be paying attention to with weak yen, 3 standard deviation long renminbi, 3 standard deviation long Aussie, et cetera? What do we got to focus on?
We still have to focus on what the central banks are going to do, and especially what the BOJ is going to do over the next few weeks. They have a meeting coming up in a few weeks. And we think that they're going to potentially raise that cap on 10-year JGB yields. Yes.
You're willing to call that they're going to go from a 0.25 out to something new?
Yeah, probably about above 0.3, maybe 0.3 to 0.4, somewhere in that range. I think at some point there's going to be a loss or a lack of tolerance for a weaker yen. As you said, imports are going to start getting more expensive in Japan.
Right.
It's true that they need more inflation, but it seems that they also don't need the kind of uncertainty that's brought to the market by a lot of dollar-yen volatility.
Okay, but Terry, with all your, I got to interrupt because this is so important. You and I are ensconced at the Imperial Hotel at the old Frank Lloyd Wright bar. You're having sake I can't afford. I'm having a triple scotch, and we're talking about a cultural change in Japan. Are we going to see that at this time?
No, I wouldn't describe it as such. To say it's a cultural change would be to say that somehow 0.25% is some sort of line in the sand that is immutable. We never thought that. It was always intended to adjust with conditions. Inflation is returning to Japan to some extent, but more importantly, the BOJ risks having a situation where it's forced to absorb and buy every JGB on the planet. If yields outside of Japan continue to go up and people continue to dump their JGBs, I don't think the BOJ would want to be in a position where it completely loses control of its balance sheet. And the adjustment they have to make here is to raise the cap. It's not a cultural change. I think it's what central banks do all the time. Move with the times, move with the data.
Tara, there was a time when actually people would not have found that as shocking, considering how much of some of the markets the Bank of Japan ended up owning. I do wonder, though, going back to your question about the idea of a weak currency being a bad thing, after so many years, when I'm sure that the Bank of Japan would have welcomed a weaker currency. We've seen this race to strengthening in the FX market. Are you saying that the Bank of Japan will be in the same camp and that really it's a fight to preserve the worth in order to avoid that kind of bad inflationary input?
Yeah, I think so. I think the kind of inflation that the rest of the world is seeing is certainly going to be visited on Japan. After all, they are not a commodity economy. Their terms of trade are not improving here. There's no reason to believe outside of central bank policy that the yen would stabilize at these levels. And I think they recognize that and will be forced to make an adjustment. It may be small. It may not be enough to take dollar yen back down to 110 or 105. But I think it'll be enough to start stabilizing dollar yen. The other thing I would keep in mind is that dollar yen typically does not go up in those periods after the U.S. yield curve inverts. And we are very close to an inversion now, the same way we were in 2007 and the same way we were in 2019. If you look back at both those episodes, dollar yen was not rising anymore. It may have been rising before, but it started to fall after the inversion. So that's another reason why we think that dollar yen may stabilize around these levels.
This raises a question about what the haven is and whether the dollar really becomes the last standing haven that will continue to get inflows and continue to get stronger versus all of its developed market peers amid the turmoil, both with respect to inflation, but also with respect to potential growth scares.
But not necessarily. You have seen the commodity currencies do very well in this context at the expense of the dollar. The Canadian dollar has been stable. The Aussie dollar has been stable. Many of the emerging market currencies that are associated with commodity economies, as in Latin America, have been very stable. So I would not necessarily say that the dollar is the redoubt here of the inflationistas. There are other currencies that one can buy here if one wants better protection, especially against the commodity-driven, supply shock-driven inflation.
Hey, Terry, just quickly, the BOJ today had to come in multiple times. I'm just thinking a few miles down the road, Terry, and getting to the end of the story. Are they going to own the whole of this JGB market once they're done? Because they own a lot of it already.
No, I don't think so, because I think that's not something they want to do. That would eliminate liquidity from the market. I don't think that's the central bank's responsibility.
But Terry, they've done that already, haven't they? What liquidity is there in the JGB market? We go some days where it's not even traded.
Agreed, but I don't think they're going to force things to an extreme here. There needs to be a liquid JGB market for the federal government to issue into. I don't think a central bank's role is to eliminate liquidity. And remember, we were looking at very tough times in Japan in the past. Deflation. We're not looking at that anymore in Japan. The need to reflate is diminishing in importance. And the need to potentially bring back liquidity to the JGB market is increasing in importance.
Terry,
it's a relative switch. I think they're going to raise the limit, the upper limit on JGB.
That's what I wanted to get to. That's going to be the big issue. Terry Wiseman and Macquarie, thank you, sir. If they want to defend this line in the sand, Lisa, it's going to get harder given what's happening in the global bond market. And if they don't want to own the whole market, they're going to have to change their threshold.
Yeah.
Because at the moment, they're coming in and they need to buy.
And as you point out, they've been pretty close to owning the whole market for a while. How much do they draw the line in owning the entire thing and controlling all price action? And Terry was suggesting we've reached that point, especially given some of the concerns and the weakening in the yen.
TK, would you call it a market anymore?
No, it is not. It is not. It hasn't been for years. I feel that very strongly, John. And what's really important here, and others have talked about this, it's not an original idea from me, is it really our first true year and decades test of modern monetary theory. It's a really interesting, then there's a lot of cultural thing in here, the insular nature of Japan. I'll tell you, John, it's a key point. I think it's way more complex than just looking at the Bloomberg terminal.
Central banks don't always get what they want. Coming up, 8:15 Eastern Time, so about 40 minutes from now, Wendy Schiller is going to catch up with us from Brown University on the comments from the president over the weekend. From New York City, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Peace talks between Ukraine and Russia resume this week in Turkey. There are still big differences remaining on terms for a ceasefire. Meanwhile, Ukrainian authorities expect civilians to keep fleeing the devastated city of Mariupol, and humanitarian corridors will be opened in the northeastern part of the country. The city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The outbreak is challenging China's zero-tolerance approach to the virus like never before. Residents will be barred from leaving their homes. Meanwhile, public transport and car-hailing services will be suspended. The recovery of the second black box from the China Eastern crash gives investigators their best chance to find out why the Boeing 737 fell out of the sky. The flight data recorder has been sent to Beijing for analysis. Officials say some parts of the device are severely damaged. HP has agreed to buy Plantronics in a $3.3 billion deal. Now, the acquisition will help the laptop maker further capitalize on the pivot to hybrid work. Plantronics sells phone headsets and audio and video accessories. The all-cash deal gives shareholders a 53% premium to Plantronics' closing price on Friday. And shares of Tesla are higher in pre-market trading. The electric car maker will ask shareholders to vote at this year's annual meeting to authorize additional shares. That's in order to make a stock split possible. Tesla has been trading at over $1,000 a share. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
companies know they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
My message to the rest of Europe, this new battle for freedom has already made a few things crystal clear. Europe must end its dependence on Russian fossil fuels, and we, the United States, will help.
President Joe Biden over the weekend, I'm sure that you haven't heard that comment on repeat because you've heard another comment on repeat, so that's a little something different for you. Futures up 0.2% on the S&P 500, on the Nasdaq up 0.25%. A lift here as the bond market move from earlier this morning fades. 247.88 on a 10-year earlier this morning through 250. 255 the high of the session, 244 the low, and there we are at 247. Let's round it up to 248. In the commodity market, Tom, we are negative by 5.7% to 107.39. And to Lisa's point through this morning, she said it repeatedly now, down perhaps for the wrong reasons, given the rolling lockdowns we're seeing take place in China and now in Shanghai.
John, the VIX 21.53, a 20 close on Friday, a 19 close in the VIX would be extraordinary signals of a buoyant equity market. Javier Blas has provided obvious leadership in Brent crude, but what he's done in going the extra mile is talk about commodities in general. Javier, I thought you were brilliant this weekend on rebar, which is, of course, the idea of the concrete, and you have to put steel in it because of the lack of tensile strength in the concrete. So you throw in the rebar, and rebar is to the moon. That's the granularity of this commodity inflation. Is it here to stay? Is there any way to pull back the price of rebar?
It's here to stay unless we have a recession. That's the only thing that is going to kill this huge price increase that we are seeing on all kinds of steel, but particularly, as you say, on the steel that is used in the construction industry, the rebar, the one that those thin rods that we put inside concrete just to increase the tension. The price have gone up 55% since the beginning of the year, January to date, and that's a lot linked to the crisis in Ukraine and Russia. Russia and Ukraine combined are the two largest exporters of steel, and at the moment we are not getting those flows.
To your wonderful book, do trading houses, I'm using that as an amateur, do trading houses have hedge potential losses on more boring things, less esoteric things like nickel, like rebar? Is there market risk here with these price moves?
I think that a lot of the market race, unfortunately, is with the construction companies, that the steel market doesn't really have the participation of the big trading houses as we have in markets like aluminum or copper. Here is what we call the service center. It's the small intermediaries that buy steel, they put it on jars, and they just waiting for construction companies to come. But a lot of those construction companies have construction jobs to do. They have price exposure. They don't have the steel, and we are going to have a big problem coming into the spring and summer if those construction companies, they need to go buy the steel at current prices, and simply they cannot pass it to their customers.
Javier, we've been focused on Russia and Ukraine as the nodes of this shock in the commodities world. Let's look at China, especially this morning as we take a look at the shutdowns and what the ramifications may be for the price of oil. How much of a disruption is China, both to the upside and the downside, with perhaps pushing prices of certain metals up because they will not be smelting and they will not be producing, while at the same time pushing oil prices lower?
Well, you make exactly the right point. This is a crisis that is going to have both upside and downside impacts for the oil market, for the commodity markets. For oil, as we are seeing today, a big move down, more than 5% down because of the lockdown, in particular in Shanghai. We're going to see lower demand. We are already seeing lower demand. You see the traffic in major cities in China has gone down significantly, and obviously jet fuel demand has completely collapsed in China just because of the restrictions with COVID. But we are going to see some upside impact from this disruption, particularly on the steel market, where we rely a lot on China. At the moment, some of the Chinese steel hubs have been affected, and we should be expecting less production and potentially higher prices on the global market. But just in general, I think that the restrictions with China and COVID increase the risk of a global recession coming later this year, perhaps after the summer. So all considered, I think that is a bearish move, significantly bearish for commodity markets.
Javier, can you just elaborate on that? The idea of the China shutdowns that we're seeing in various degrees leading to some sort of global recession. Paint that in terms of the commodity market at a time when people were worried about Brent crude getting up to $150 a barrel. If this lowers that, why wouldn't that actually reduce the risk on the margin of the commodity shock leading to a recession?
Well, it's going to help on the margin with commodity prices, but at the end of the day, the impact so far on China is bringing the price of oil down from $120 to $115. If vehicles come all the way to $100, it's still expensive prices for oil. It's expensive diesel. So we are having a shock going through the global economy with high energy prices, and China is not going to change the price of natural gas here in Europe or electricity. So you add that we are still having that price impact into the global economy, and now a slowdown on the Chinese economy just because of the COVID restrictions. I think that the chances that the global economy slows down after the summer have increased significantly.
Javier, I've got to leave it there. Thank you, buddy. As always, Javier Blas, the wonderful Javier on the commodity market. In the FX market, this gets my attention. Cable, 131.19.
Yeah,
very
talk
close
about that.
to breaking 131.
Yeah. What's the
Closed
significance
out
here?
last year at 135, just as the Bank of England started a tightening cycle. And now that tightening cycle has become a little bit fragile. Governor Bailey speaking earlier this morning, making some comments in Brussels saying it might be, quote, might be appropriate in the coming months to tighten monetary policy as opposed to a likely move, which is some language they'd used in the past. I know we're sort of coming through the words here, Tom, but it's important. He's worried about the pickup in prices, but ultimately the pickup in prices hitting demand, which is something we're all grappling with. Are these central bankers tightening into weakness? And if they're hiking into weakness, what does it mean for the currency trade? For cable sterling, it's weaker.
May I suggest maybe the most important people on team surveillance is Michael McKee, because the granularity of the data here, John, is going to be critical. John, over the weekend there were a couple whispers in the zeitgeist of the spy business, and particularly the spy business in Europe. To be serious here, I'm going to make a joke about it, but John, there's lots of expelling of diplomats and tit for tat going on an eventful Monday. I know, John, North Macedonia expels 5 Russian diplomats. probably because they bet on Italy, but hey, who knows?
Would you like me to weigh in on this, or can I
I'd like
just
you to
let
weigh
this
in
go?
on this.
I'll let this go.
Okay,
Bramo
you'll
doesn't
let
know
this
what we're
go.
talking about, and that's a
Just
good thing.
no idea.
No idea at all.
North
That's a
Trying to
Macedonia,
actually
Portugal
connect this to the
coming
Bank
up.
of England.
No, this is about
Governor
Italy
Bailey.
losing to North Macedonia last week and not being
Oh,
in the World Cup
thank
later
you.
this year.
Thanks for translating.
So any
It's
headline that's
inside joke.
associated with North Macedonia, it doesn't matter what it is, Tom's going to bring it up on this program.
Thank you.
Look at that.
Canada, World Cup bound.
Stopper.
Futures up 0.2 on the S&P, on the Nasdaq up 1/3%. In the bond market, we'll shape up as follows. 247.33. I'm still sore about this the whole weekend. Honestly, I'd wake up, I'd go to the sport pages on the Daily Mail, and there's another article about Italy and how bad the team is. You know, I can't even read the sport pages these days.
I just go to page 3 in the Daily Mail.
That's the wrong paper, Tom. I think you're thinking of a different newspaper in a different time and place. Stay out of trouble, all right?
Boundaries.
We know that it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently, because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines, and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
For the last 20 months, we've basically gone sideways.
We're going to be looking at a growth shock and a further down the line.
The market probably always wants the Fed to do nothing and just to have lots of easy money.
We think that we're actually set for a pretty sharp slowdown this year.
Ultimately, I'm following the data like everybody else, and the data at the moment are extremely confused, extremely confusing.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. A most eventful Monday for you on radio and television. And John Farrow, it's simple. We begin to measure yield up, price down, and a bond bear market.
And there's some big losses, Tom, through the whole Treasury market. 10-year yields, where are we now? Through 250 earlier, 246. The spread between 2s and 10s in single digits early this morning, Tom. Right now, 14 basis points.
You wonder, John, when that shift is where there's a lot of yield analysis and it's, oh, wait a minute, let's check price, and down we go.
We're doing that now, aren't we, Tom?
I think we're doing that now, and I think there's a sea change here with the correlation into central banks looking at currency as the litmus paper of the global system.
Dollar yen through 125. We're starting to find out which central banks are going to do what this year. The Bank of Japan wants to keep things as they are. Yields low, and maybe a Japanese yen that's a whole lot weaker. The Federal Reserve is ready to go big time. They have much higher confidence in the growth outlook and need to do something about inflation. The Bank of England seems to have a much more balanced view on the trade-off between growth and inflation. And I hear from Governor Bailey, what I hear when he speaks, Tom, is a man that has a much, much lower confidence level about the outlook for growth than, say, Chairman Powell does right now.
Two very different economies, but at least the president back in Washington after a modest gaffe, to say the least. He's going to recover with budget discussions today as he tries to nudge forward the American economic experiment.
And frankly, it puts into relief the idea that we are seeing this fiscal drag this year. Just to add on to John's point, that yes, the U.S. consumer has been incredibly resilient. That's the reason why people have found a haven in the U.S. That's why people are pricing in 8, 9, 10 rate hikes in the next 13, 14 months in the United States. That gets called into question as you start to see the move in Washington away from stimulus and toward reducing the budget, toward budget cuts, toward higher taxes. That's going to be the conversation.
Let's pause here before the data check. We're going to go parochial, except it's not parochial. It's from sea to shining sea and maybe worldwide. Lisa, rents is one indicator of the angst of America. They are stunning.
They are surging at unbelievable, unprecedented paces, particularly in the Sun Belt, in places like Miami, in places like Austin, Texas. We've seen some 39% increase in rents in certain places in Florida. Just to give you a perspective, so at this point, these rapid input costs are eating up discretionary incomes at a time when discretionary spending and savings have fallen back to where they were before the pandemic.
Let's do the data reality right now. John, I'm going to go to the equity market with a nice recovery, a resilience here this morning. You're looking at other realities in the bond market.
Well, equity's up a little bit more as the bond market move fades, and fades in a big way in many ways, Tom. 246 on 10s after breaching 250 a little bit earlier this morning, and the range in 2s has been absolutely massive as well. On a 2-year yield right now, 231.50 after breaching 240 a little bit earlier this morning, Tom. The range on 2s today from anywhere between 226 at the lows and 240 at the highs.
Oh, right now, we're going to bring in Matt Dissock with us, head of fixed income strategy, chief investment officer at Merrill and at Bank of America Private Bank. Matt, thank you so much. The calculus here, the first and second derivatives are extraordinary. Are you more focused on the rate of change or the level of bond price this morning?
I'm more focused on the overall level of rates and, most importantly, the shape of the curve. And as we've talked about, many times in the program, one of the most significant Fed pivots in recent memory, and a welcome one, slightly late, but better late than never. They're finally catching up to the inflation problem, and what the yield curve is telling you right now is that they're going to be able to get inflation back down to a reasonable level over the next several years, but not likely back to that 2% level. So at some point, they might have to make that choice. Do you want to keep that target at 2% and cause a recession, or do you want to sort of move a little bit away from that target and try to keep growth coming? But they're reaching an inflection point here with break-even inflation rates in 5 years, 375-ish, with the curve flattening and inverting in many places. So it's a tricky time for sure.
Matt, do you doubt the City call then? They think you get another 250 basis points of hikes from the Federal Reserve this year. And the reason being, they think you need to constrain this economy. And to constrain the economy, you need rates a whole lot higher. Their view on equity prices, quote, they're roughly unchanged. A sign the policy path being priced in is not yet being interpreted by markets as overly hawkish. Would you agree with that?
So our forecast as well is that the market is basically correct. The market's got, 9 hikes priced in right now for the next, sort of 12, 14 months. We're generally on that view. We're generally the view we're going to get to a 3% plus Fed funds rate at the end of the cycle. And that's kind of where the market is. And that seems to be the correct place for now. Again, because inflation is a problem. It's a real problem. You can see it everywhere. One of the best indicators to look at would be the University of Michigan Consumer Sentiment Survey, below 60. You've only seen that 3 other times in history, global financial crisis and the sovereign debt crisis, but it really looks a lot like the number we saw in 1980, one of the worst recessions we'd seen, inflation double digits. We have the University of Michigan Consumer Sentiment level at that type of level. And what's really driving consumer sentiment, especially UMich, is durable goods and inflation, how expensive things are. So it's really starting to hit the consumer, which is why, and this is unusual as well, at the start of this rate hike cycle, the 2-10s curve was in between 25, 30 basis points. That's very unusual. We've only seen that back in 1999, which is a very shallow, short hiking path, which actually saw an asset bubble that had popped. So it's very unusual to be hiking this much into this flatter curve. But the amount of rate hikes baked in, which we generally agree with, is correct and is necessary to get inflation back down to more reasonable levels. So expecting to get to close to 3% of Fed funds, a couple 50 basis point hikes, the Fed needs to do this.
We got some massive energy issues in the mix as well. So let's go through some of the headlines coming out of Germany at the moment from the economy minister. This off the back of some comments from last week from Vladimir Putin that he would like ruble payments for Russian gas. And Lisa, here's the line. G7 energy ministers agree that Russia must honor contracts. G7 energy ministers also agree that they won't accept ruble energy payments. Those lines coming in just moments ago.
Yeah, basically slapping down the prospect of paying in rubles, fortifying that currency, the tit for tat. And this says we also get headlines that Credit Suisse has stopped pursuing new business in Russia, adding to this exodus that we have seen from that nation. Matt, given this shock that comes at a time of a tightening cycle, from your perspective, does it make sense to lean into risk? We have seen a rally in credit spreads. We've seen people talk about junk bonds as a haven. If you're looking at a 3% Fed funds rate at the end of this cycle, what does that do to the corporate debt complex that has relied on a low-rate regime?
So generally speaking, right, there's a lot of factors here. And even though nominal inflation is quite high, that's not all negative. And where it's particularly not all that negative is for corporate America. Nominal growth is high when nominal inflation is high. Corporate revenues are still growing fairly well. Earnings are still growing fairly well. Costs are not catching up as quickly. So that's one of the reasons we are not that focused on a recession at the moment. We do not see a high risk of a recession this year. Again, it's going to be week to week, month to month here, but we're not seeing that right now. We're not overly concerned about leverage in corporate America. Now that doesn't mean we're very super pro risk and chase risk right now. We saw credit spreads move out to that 140 to 150 level. That was signifying to some a higher chance of recession. What it was actually saying was there was liquidity concerns there. So they've come back to the sort of 125 level, slightly elevated, which is appropriate. They should be slightly elevated in this environment, but not at a recessionary risk. And so we're not overly concerned about investment grade credit. And we want to be very clear on that.
Matt Diesel,
if you look at a diversified,
I've got to run. We've got to leave it there. And I thought you were done too, because it was a long pause. Forgive me. Maryland Bank of America Private Bank, Matt Diesel there on the bond market and a whole lot more. Equity futures up 0.2 on the S&P. Lisa mentioning the news out of Credit Suisse, the news out of HSBC, Tom, over the weekend from the Financial Times, reporting that they've been editing their research reports from their analysts to remove any references to, quote, war in Ukraine. And they're choosing the word instead, Tom, conflict.
For these with a memory of Vietnam, this is a sensitive issue, and I thought the FT did a very balanced job off of whatever they've seen of the tugs here, including their staff within Russia. But the word conflict, John, to a whole piece of America is a conflict in Vietnam that was not a conflict. And that really hit a third rail with me.
They have 200 staff in Russia, Lisa. They're clearly worried about their staff there, just based on how they're doing this. They pointed to a statement. The FT asked for comment. This is the statement, a previous statement from HSBC. Our thoughts are with all those impacted by the continuing conflict in Ukraine.
Seeming to almost support what they were talking about by not calling it a war. Remember that Vladimir Putin actually made it illegal to report false information, including calling it a war, if they discuss that. So how much was this, Tom, to your point, the 200 people that HSBC has working in Russia, calling this a war, being associated with that, getting thrown in jail?
John, what's interesting to me, and this is not reported, and I'm just pontificating here, I wonder how much of these decisions are employee-based. I don't have an answer for that.
Why do business in Russia, right? I mean, that really is the question,
Well, that's going to be the question. And for that matter, look, this is semantics. We know in other countries, some banks are even wary about their outlook on those economies, given the presence they have in those countries too. That is a much bigger problem. That is a much, much bigger problem. This is about word choice. I'm much more concerned about banks that operate in certain countries and that refuse to give their actual honest outlook on the economy because they're worried about their presence in that country. That's a different story, and that's a much, much bigger issue too. Futures up more than 0.1% on the S&P. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden will propose what the White House calls the billionaire minimum income tax. It calls for a minimum 20% tax rate that would hit both the income and unrealized capital gains of households worth more than $100 million. Progressive lawmakers have complained that the tax code does little to tax the richest Americans. President Biden trying to clarify his stunning comment that Vladimir Putin should be removed from office. Now, he says he was not calling the regime change. European allies raised concerns about the president's remarks, and critics say he was further inflaming tension with Russia. The U.S. says a revival of a nuclear deal with Iran may not happen soon. Iran has made a number of requests recently, including that Washington removes the Islamic Revolutionary Guard Corps from its list of terrorist organizations. The U.S. is reassessing the political costs of reviving the 2015 pact. The agreement limited Iran's nuclear activities in return for sanctions relief, including an oil exports. And shares of Tesla higher in pre-market trading. The electric car maker will ask shareholders to vote at this year's annual meeting to authorize additional shares. That's in order to make a stock split possible. Tesla has been trading at $1,000 a share. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases, or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The first step in building a connectome is to get your hands on some brains and then cut them up. It all sounds very grim, but Harvard turns out to be quite efficient with its brain harvesting. Jeff's lab can do a year's worth of research with a single mouse brain. Small chunks of the brain are fed into the slicer, where a diamond blade carves off a thin sliver of tissue. The tissue floats along some liquid and onto a piece of tape. The brain slices are then put into this very large machine, where they're photographed in the finest of detail. Software helps stitch the pictures back together into a single 3D image, and algorithms are applied to help make sense of what's going on inside of the brain.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Tuesday, Bloomberg Technology is live from the Shop Talk conference in Las Vegas. Emily Chang sits down with Uber CEO Dara Khosrowshahi, DoorDash President Christopher Payne, and Savage by Fenty President Christiane Pendarvis, bringing you insight and analysis on the future of retail.
Are there customers that you think you've permanently won over?
Bloomberg Technology live, Tuesday at 5 p.m. in New York, 2 p.m. in San Francisco on Bloomberg Television.
The negotiations does not mean what Ukraine is ready to surrender. The negotiations mean that, there should be a solution and push and diplomatic pressure to stop Russia.
Oksana Markarova there, the Ukraine ambassador to the United States on NBC over the weekend from New York. Good morning. This Monday morning, futures positive on the S&P and on the Nasdaq as well, up 0.2% on the Nasdaq 100, up a little more than 0.1% on the S&P. The move in the bond market fades through 250. 255. We were thinking about 260 earlier this morning, and Tom now back down to 246, down about a basis point. A bit of calm in the bond market.
Yeah.
Can we call it chaos 6 hours ago? It was a bit messy, wasn't it?
It was a bit messy, and again, the pulsing of the red and the green on the Bloomberg terminal is definitely calmer right now. This is a joy, and with the uproar over the last 48 hours on President Biden and the trip, we thought we'd talk to the adult in the room who actually can give perspective. Professor Schiller, Wendy Schiller's Taubman Center for American Politics at Brown University is definitive in the span of American history. Wendy Schiller, Obama, 2008. I know that I don't look like the Americans who've previously spoken in this great city. Obama clearly talking about JFK. Reagan with Gorbachev, June 12, 1987. That was the weight on this president to find the right tone. Did he come near it, or was it too much pressure?
Well, I think that he is concerned about looking too weak. I think that's, one of the things that it's sort of the hangover of the Obama administration, especially when it comes to Russia, obviously with Syria in particular. How do you stop people from doing terrible things? How do you stop people from doing military exercises, invasions, killing people, blowing up buildings? That's what Americans are seeing nonstop. And they're wondering, with this massive apparatus, military apparatus we have, why we can't do more. So he's trying to urge everybody to say this guy should not be there. He's illegitimate. Now, it's borderline. You know, the United States is legally prohibited, obviously, from trying regime change short of declaring war. So I think that's the problem for him. I mean, to me, that's the problem for him. But that's what he's trying to do. It's the shadow of Obama in Syria that I think is really governing a lot of what they're doing here.
Professor Schiller, this goes to your classic textbook. It goes to Obama 08. It goes to Reagan 1987. They didn't have the speed of modern media that President Biden faces. How is he doing adapting to the new realities of news flow?
Well, I mean, he's not of the generation, and he's been making gaffes ever since he, went to the United States Senate. So it's not as if he's going to change his style per se. What's surprising to me is the team around him has been his team for a long time. They're almost like fused as one person, but they should know better. Or he should make sure to hire people who know better, who know how to manage these communications, or at least to try better than he's been doing. The wisdom that comes with age is great, but if you're not willing to listen to people who are more in tune with what's going on now and how to communicate the message, then you're going to make missteps.
But Wendy, based on your comment there, that it should have been his team to call him out, are you saying that this was perhaps a little bit predetermined heading into this speech and not an ad lib, as people said afterwards?
Yeah, no, I mean, I think he is trying to establish that there are certain people who should not be in power, that there's a legitimacy that comes with power, and that when you misuse military power particularly, and you invade another country, just as George W. Bush said about Saddam Hussein, going back all the way to the first Gulf War and his father's war, this person should not be in power. They are not legitimate, and the world can do something about it. That was the message, and I think it was on purpose.
Wendy, is there a difference between the opinion of the President of the United States and the official policy of the administration across a range of issues? I think we're used to the President speaking and that being the policy, but is there a difference between his opinion and the policy?
Well, yeah, there's certainly Ronald Reagan used to say, I'd issue an order or take a week for it to be implemented in the White House because, policy is a huge bureaucratic apparatus. So the things that we do and the people we have on the ground diplomatically, militarily, all those things are set in motion, almost separate from the president, even though he's the commander in chief. It should be the same, but in fact, and how it plays out, I think it can be quite different.
Right now, Wendy, we're heading into a midterm period with consumer sentiment at the lowest since 2011. President Biden is going to try to shift the message back to the United States in this speech at 2:45 p.m. today about the fiscal year budget. How much is this focus on taxing the wealthiest individuals an effort to try to channel some of the anger that people feel into this versus actually plugging a deficit gap and actually planning forward for a policy measure?
Well, I think the Democrats are counting on this message to be something they can carry through the summer, and that will be popular over the long run. I don't think it does anything for anybody who's paying too much money at the gas pump today or finds that there aren't enough products on the shelves or is paying too much for rent, for food, for everything else. So it's not a short-term boost, but he's trying to lay out a message for the party they can go into the summer with that sort of positions the Republicans on the wrong side of struggling people who are struggling economically. So it makes sense in the long game. I don't think it does anything for him in the short game.
Wendy, just quickly, typically a president might wait until after the midterms to have a shake-up of his cabinet. Do you think that's due now? Do you think they need to get ahead of some of this?
Yeah, I mean, even Bill Clinton had a shake-up before his first midterm and certainly had a shake-up after his first midterm, which was pretty disastrous for his presidency, although it let him get reelected in 1996 to have the foil of the Republicans. That's the Achilles heel for the Republicans. If they take the Congress in 2022, then Biden can play off them. The Democrats can play off them going into 24. So, yeah, I mean, I think it's really a problem. But, the political cycle has gotten so quick that we just don't know how much is baked in for the outcome of the midterm and how much can change.
Who do you think is letting him down?
Who do I think is letting him down?
Yeah, who do you think needs to go?
I think his messaging staff. I mean, I think Jen Psaki does a good job, but I think that his communication staff has not figured out how to shift him, how to simplify things, and the party itself. It has to be same message, on message as a party, as the Republicans have been in lockstep. And, that's simple to absorb in a world that is more confusing than ever, that is more scary, really, than it's been in a while. Coming out of the pandemic, we're supposed to be happy. There's war in Ukraine. These are confusing times. Be simple if you're a politician. Have one message and stick to it.
Wendy Schiller of Brown University. Wendy, thank you, as always. TK over the weekend. There wasn't anything simple about it, was there?
No. The complexity here, John, into this Monday is extraordinary. As I mentioned, John, you caught me unawares. Jobs Day, April 1, Friday. It's going to be a huge week here, and we haven't even talked about the prosecution of the said conflict in Ukraine.
One thing we can talk about is that these sanctions are having a big effect, and not just the direct sanctions, but also just companies feeling like they have a moral obligation to get out of Russia. And Lisa, Carlsberg Group to leave Russia. There's another one.
One after another. And then when they don't leave Russia, you see the complications of trying to toe the line and protect employees while hewing to the desires of Vladimir Putin.
Russia no longer to be included in revenue and profit from Carlsberg just moments ago to seek a full disposal of the business in Russia. We'll pick up on those headlines in just a moment. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan, bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu, sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Live from New York City, on radio, on TV, this is Bloomberg Surveillance with futures up about 1/10% on the S&P, up a little more than that on the Nasdaq. Yields fading from the highs of the session, now lower by a couple of basis points on a 10-year at 245.30. Another morning, another big company heads for the exits in Russia. Carlsberg Group to leave Russia to seek a full disposal of the business in Russia. That headline just crossing moments ago, Tom. The team at Bloomberg just working through some of the numbers. In 2021, Russia and Ukraine accounted for approximately 13% of group revenue. The recent breakout that I've seen for Russia on its own, Tom, is about 11% of revenue. So somewhere between that number. That was for a year or so ago, 2 years back in 2021.
This is someone I've talked to over the years with France and Lacroix, John. It's always a really eventful thumbprint of business worldwide because they do roll-ups. And this is a Baltic states roll-up with Russia. Russia 1990. Some of these companies are ancient. There's one I can't pronounce, John, out of Lithuania that goes back to 1784. You wonder how Carlsberg peels off Russia and yet maintains the complex relationships they have in the Baltic states.
Hey, Tom, and Heineken too. And isn't this the issue? You've got the oil majors trying to pull back. I'm thinking of BP. Right? What are they going to do with their stake? Who do they sell it to? Who's going to buy it? Here's another one looking for disposal. Tom, everything's happening at the same time. I think we can call this a fire sale across a range of industries in a single country, of which there is a very small pool of buyers. So where does the money come from? What do these transactions look like? And how long does it actually take to fulfill the goals that some of these companies have?
Based on some other wars, it takes longer than you think. I'd really go back to World War I as one of the tumultuous workouts like that. Not to say we're in a world war, but certainly the globalization tone is adjusted. We adjust now on this eventful Monday with Michael Darda. He's chief economist, macro strategist at MKM Partners. He folds market analysis into his economics. Michael, I've got to go to the symbolism of the Bloomberg Total Return Index breaching a long-term moving average. Is the great moderation over? Is the great deflation we've seen from Volcker done?
Well, we'll have to see about that, Tom, but this is certainly shaping up as a very different economic cycle from anything that we've seen in the recent past. And just looking at statistics like nominal GDP and inflation pretty much tell you all you need to know on that score. The last cycle was characterized by 4% per annum nominal GDP growth, inflation below 2 on average, mostly below the Fed's target. This one looks quite different from that perspective. Right. More than 15.5% annualized nominal GDP growth. Last year was 12. The Fed's own forecasts imply more than 7% on nominal growth this year, most of which will be inflation. So we have to go back decades to see anything like that.
Yeah, Michael Darda, I channeled the inner Michael Darda with Jude Wininsky years ago, and I did the nominal GDP study of Japan. And their flatness, their zombie economy, goes back to 1994. Do you look at Japan as discrete and separate, or do you have to fold the Japan reality into your U.S. analysis?
Yeah, I mean, I think Japan is a case study essentially on repeated policy failure. And, you know, they did have a period of moderate reflation that started after 2013, but seemed to essentially throw the towel in on that. And they've had the worst nominal GDP performance of, you know, if you look at 3 large regions, you know, the Eurozone, the US, Japan is flat on its back in terms of nominal GDP growth. The Eurozone, actually right before this recent geopolitical crisis, was looking quite good with a pretty powerful V-shaped recovery in nominal GDP, something that was not seen during the last cycle. So unfortunately, Japan really does stand out as a laggard, and monetary conditions are much tighter there than they have been in the Eurozone and the US, and in the US, and nominal GDP speaks to that fact.
And when we talk about the US, a lot of people say that it's isolated even from Europe in terms of its resilience and how much strength there is. You're not that worried about the yield curve, at least not yet. Why do you think that people are making too much of this?
Yeah, thanks for that question, Lisa. So people are getting worried about some of these belly of the curve measures that you know, have flattened out pretty dramatically. And and so that's creating consternation that, okay, we're going to see an inversion in a subsequent recession. But most of the literature on the yield curve as a recession forecasting tool has relied on a very short rate like the T-bill rate versus a long rate like the 10-year. Those measures are steepening around 200 basis points, nowhere near inversion. The Federal Reserve actually just released an updated study advocating what they call, a shorter term curve, where they're looking at like T-bills relative to the 2-year yield, also just moved to year-to-date highs. And so the curves that forecast recessions have actually been steepening. Some of the belly of the curve measures like 2-year to 10-year rather, have flattened quite a bit, but that's not going to be enough to hang your recession hat on, in my opinion. So we shouldn't make that call before we do.
Does that mean that you think that, Michael, this economy can potentially avoid the recession that so many people are calling increasingly inevitable, if not this year, then even next year?
Yeah, I think we're going to, I think this year will be a year of growth, a year of elevated inflation. I am concerned that it will be difficult for the Fed to pull off the fabled soft landing, simply because they've fallen so far behind the curve. In the quest to catch up, that does raise recession risk. Not a 2022 event in my view, but it's hard to see this business cycle really extending as long as the last. And I hope I'm wrong about that, but I think the Fed's got some real challenges in front of it as it tries to adjust and not just get to neutral. If they're going to try to get inflation rates back down closer to target, they may need to get into a restrictive posture, and then that obviously has business cycle implications. Yeah. Not a 2022 scenario in my opinion.
Michael, the experience of this is something comes out of nowhere. There's overcome by events, if you will. David Folkerts-Landau at Deutsche Bank, acclaimed academic, makes very clear the currency dynamics are going to involve Europe and others intruding in to move their currencies around to make it more flexible, more fungible for their financial systems. Should we look for devaluation, depreciation, stoppage by these nations where they come in some form of intervention?
It's possible, Tom. We're not really seeing much movement there. There's obviously been quite a bit of concern and hand-wringing about the dollar, the potential for the dollar to weaken dramatically, but the dollar's actually appreciated year to date. So, we'll see. What I think is a more interesting story is what's happening regarding expectations of the internal price levels, right? So we're seeing inflation expectations go up pretty handily in Europe as well as the U.S., and, that comes back down to accommodative monetary conditions and those conditions persisting too long. And so, we're really quite focused on that. If you look at these credit market variables, boy, they look a lot different than they did during the last cycle when we had stock market corrections. Typically, those were always associated with falling inflation expectations not happening this time, dramatic widenings in credit spreads also not happening. Conditions have tightened very, very, very little. And, we talked about the yield curve before. The measures that actually predict recessions have been steepening. So that is very much a central bank behind the curve story, not a premature tightening path story.
Mike, then, do you think that the bond and stock markets are actually moving coherently? We've been talking all morning about how maybe stocks are not listening to bonds. Are they listening just fine, and the message is much more sanguine than they're making it out?
Yeah, I think that's a great point. So, we have high valuations here in the U.S. The S&P 500 is trading at a 20 multiple. And in that environment, anything that will push long yields up will tend to be a headwind to the valuation. So stock markets can come down because of growth scares, but they can also come down due to inflation scares or valuation pressure. And with the 10-year yield rising and these elevated valuations, we see how that's playing out, especially with some of the more expensive areas of the marketplace, like large cap tech stocks, bloodbath this year as long rates have moved up. So in that sense, they are sending the same message.
Mike, awesome. As always, Mike Data there of MKM Partners. And to Mike's point, he made several great points there. The 3-month, 10-year curve has actually got steeper over the last month or so. and it's not inverted. It's got steeper, not flatter. If you look at equities, they are higher, not lower. Credit spreads over the last few weeks are tighter, Lisa. They are not wider. And as you've pointed out several times, financial conditions have become less restrictive on many days as well. And that's got to be a head-scratcher for this Federal Reserve.
Whether they want to change that or whether they actually like this because it allows a soft landing. Does this actually accelerate the prospects of longer-term inflation and them having to move 250 basis points as Bank of America believes and as Citigroup believes in your conversations with Andrew Hollenhorst?
If you want to get something done about inflation, you need a restrictive policy. I mean, bottom line, right? It's not for me to tell them what they should do. Right. That's what they're telling us. If you want to do something about it, you've got to get restrictive. This ain't it.
No, so does this mean that the market basically doesn't believe that they're going to move? Or does this mean that they're going to have to do much more to actually crimp demand in order to show the market that they're actually serious?
I won't offer my opinion. Andrew Hollenhorst of Citi, Tom, thinks it's not restrictive enough, and the market's interpreted that as follows, and therefore the Federal Reserve needs to do a whole lot more, which is why it's got a monster call for the rest of this year.
In the heat of it, I'll pick up where Ian Shepardson was of Pantheon, which is a respect for the x-axis, and that you can have a magnitude move, whatever the story is, whatever you're talking about, but there's the whenness of it, the timing of it out the x-axis, and Shepardson says he would suggest the shortness of the Citigroup move is a bit aggressive.
I'll keep going back to that line from Citi. Equity prices are roughly unchanged, a sign the policy path being priced is not yet being interpreted by markets as overly hawkish. We'll get into some of this with Jay Poloski of TPW. He joins us in about 20 minutes' time.
That's an important conversation.
Is he still constructive on Europe, Tom?
Yeah, and the Pacific Rim, too.
In a big way.
Yeah.
Futures unchanged on the S&P. This is Bloomberg.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Peace talks between Ukraine and Russia resumed this week in Turkey. There are still big differences remaining on terms for a ceasefire. Meanwhile, Ukrainian authorities expect civilians to keep fleeing the devastated city of Mariupol, and humanitarian corridors will be opened in the northeastern part of the country. Another company pulling out of Russia in response to the invasion of Ukraine. This time it's Danish beer maker Carlsberg. The company says it has taken the, quote, difficult and immediate decision to seek a full disposal of its business in Russia. And the city of Shanghai will be locked down in 2 phases to conduct a mass testing blitz for the coronavirus. The outbreak is challenging China's zero-tolerance approach to the virus like never before. Residents will be barred from leaving their homes. Meanwhile, public transport and car-hailing services will be suspended. HP has agreed to buy Plantronics in a $3.3 billion deal. The acquisition will help the laptop maker further capitalize on the pivot to hybrid work. Plantronics sells phone headsets and audio and video accessories. The all-cash deal gives shareholders a 53% premium to Plantronics' closing price on Friday. And Walmart reportedly is ending cigarette sales in some of its U.S. stores. According to the Wall Street Journal, the move comes after years of debate with the chain's leadership ranks. A spokeswoman wouldn't say how many locations will keep selling cigarettes. She told the Journal Walmart isn't halting all tobacco sales. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
putting the issue of Ukrainian statehood in question.
What is happening is a genocide of Ukrainians.
Ukraine will never be a victory for Putin.
Putin must fail.
Turn to Bloomberg for up-to-the-minute reporting from around the world.
1.2 million people have crossed over from Ukraine into Poland.
The fastest growing refugee crisis since World War II.
The latest target, a children's hospital and maternity ward.
Putin has gone all in.
And analysis of what it all means to you.
The corporate exodus continues.
To continue the pressure on the Kremlin.
We could see an energy blockade. That would have a massive and devastating impact on the German economy.
For every dollar the United States could lose with the sanctions, the European Union stands to lose 10.
The world has a food security problem already, a huge one.
The Russia-Ukraine invasion is going to be worse for global poverty than the pandemic has been.
I think we're in for a long slog.
For continuing coverage from Ukraine and around the world, keep it tuned to Bloomberg Television and Radio.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
We think that they're going to potentially raise that cap on 10-year JGB yields. Yes, probably about above 0.3, maybe 0.3 to 0.4, somewhere in that range. I think at some point there's going to be a loss or a lack of tolerance for a weaker yen. As you said, imports are going to start getting more expensive in Japan.
This is what surveillance is about. Thierry Weissman there of Macquarie, and of course legendary at Bear Stearns on the moment in Japan. We are thrilled that Dr. Weissman could join us today. In the blur of all the news right this morning on yield on markets and the president's return to Washington, and look for that budget discussion this afternoon, there's news that comes out of nowhere. This reminded me of Fooled by Randomness, a wonderful Nassim Taleb effort. It's one of the things I threw at the family and said, shut up and read this. This is the real world. Marcus Ashworth knows that as well, Bloomberg opinion columnist, and he joins us now on the surprises that happen in skyscrapers where you walk into a room and they go, what? And this is Marcus Barclays about rescission and not recession. It's not the Rescissory Act of 1661. It's somebody screwed up on a paper issuance. They said, oops, and I believe it's $500 million. Define the oops of Barclays.
Well, I think the only thing we can say is all of us have learned a new word today, but it was, I mean, one you would just think it's just a simple filing error. They forgot to add an extension to the shelf, and that's very embarrassing, logistical error, which it just shows you but the scale and size of this business. And there's two elements to this. Obviously, Barclays can get relatively cheap funding by using these things has structured notes, but then the structured notes themselves have a life of their own where you have to issue around it to facilitate the size of, if it's backed by some form of volatility or oil metric, or indeed stock market equivalent to, like, it's almost like an ETF, or these ETNs that they get issued off the structured note. It's a huge business for them, and it's just very embarrassing. But in itself, it's probably a quantifiable error, and hopefully not repeated.
Very importantly here, is the city over-leveraged like our perceptions of 1998 and 2007? Is there a comfort on the balance sheet where when things go oops, the banks are solid, including Barclays?
I would say definitely yes. The only one thing I would flag up that potentially is needs to be close eye kept on is probably leveraged loans. But I think the Archegos scandal and prime brokerage has caused a big think to make sure that that was completely unexpected, just like this Barclays thing was. And certainly Credit Suisse has had a very tough time of it. But there are a lot of questions being asked. I think the banks are in far better shape, particularly in the UK and the US, than they were, in the global financial crisis, for sure. So I think the regulators have done a very good job overall, but they can always do better. And I think clearly leveraged loans is one area they could be much more focused on.
Marcus, there is this bigger question right now, especially amid the normal gaffes and the extraordinary gaffes that we see that have been, frankly, routine on Wall Street for decades, how resilient banks will be to not getting anything back as they try to close out their businesses in Russia. And I do wonder how much that has been priced in, overpriced in, as some people have said, or whether you really think that people need to do more work to understand the hit on top of the slowdown.
It's almost unquantifiable. I certainly think some banks probably made some quite decent money in the lead up to what's happened, a recent reputational hit, a brand hit, and that's what's got to be controlled. And that's a bigger loss on write down of their share valuation is worth taking a potentially smaller hit on closing an operation. Now they can restart them again. It's a question whether or not this is the smart thing to do, to take and give basically back to the Kremlin something for free. That's what I find with a lot of this self-sanctioning. It doesn't make a lot of sense to me.
Marcus, you've been in the business a long time. When you talk to colleagues at banks, what's the mood like right now?
Honestly, pretty good in the overall context of obviously what was a very good year last year. What I think everyone feels like, everyone now, is the sort of sick feeling of like, when's this roller coaster going to stop? Because so many bad things are happening and things out of left field you wouldn't have expected. Particularly just the bond market. This rout doesn't seem to stop. I certainly think on Friday that Citi note shocked everyone. Everyone was expecting the Japanese year end to happen, quarter end, all this sort of stuff. Quiet Friday, not the case. There was another huge bout of selling and repricing. At some point it'll stop, but for the moment there is no end to it, and that is causing problems because you do want to do new deals, but it's very hard to get a new deal away in a volatile market.
Marcus, thank you so much for the brief on Barclays. Marcus Ashworth, writing for Bloomberg Opinion, just brilliant stuff. And I do want to mention John Auter's wonderful column today as well on Japan. Lisa, the one thing we haven't talked about this morning is your wheelhouse, which is yield up, price down in credit, in corporate bonds of quality, and also the garbage you follow so closely. Are they getting hammered?
No, that's the irony, is that they're actually pretty resilient. And recently you've seen them rally, at least if you look at the credit spread aspect of them. They're considered a haven. It's mimicking what we're seeing in terms of the equity strength.
Why is a garbage bond considered a haven?
People believe that the U.S. will avoid recession. You see companies that do not have near-term maturities. They're not heading into a crisis of any sort in terms of liquidity. So if that's the case, then they offer an extra cushion against the benchmark yields, which have been rising. I do want to just note, though, as we were talking, 10-year yields are now markedly down on the day at 2.44%. At one point, they had reached almost 2.56%, just to give you a sense of how whipsawy, how wild this session has been as people try to game out what the road ahead is.
When you were on your sabbatical, I mean, we saw the same idea. And Lisa, on radio, I'm extending my hands wider. The range has gotten wider, and that involves a lot of slack or sway almost in prices.
honestly, how much is the Fed behind the curve? I'm thinking about what Mike Darda said, that basically this market does not believe that the Fed is going to get ahead of the curve. And if they're behind the curve, how negative will that be down the line, but necessarily positive in the near term because we're still looking at accommodative conditions?
We will see. It has been an extraordinary Monday. Thanks to our team from last night, moving things around so we could give you the spirited conversations we try to do each day. Please stay with us this morning on radio, on television. This is Bloomberg.
Welcome back to another Miami Open update for Bloomberg TV and radio. From Tennis Channel, I'm Erin Coscarelli. American stars enjoyed even more success Sunday at the Hard Rock Stadium. 18-year-old Coco Gauff had to fight her way into the round of 16 for the first time at her home tournament. The American edging Zhang Shui in 2 tough sets for her second victory over a Chinese opponent in the Sunshine State.
She's not an easy player to play. I knew coming into the match she was going to be tough. She has some recent success, well, obviously on the doubles court, but she just won a title in Lyon, I believe. So I knew she was playing confidence. So I was really just trying to dig my way through that.
And Francis Tiafoe flew the red, white, and blue as he took care of business against Argentina's Juan Manuel Cerundolo. The American didn't face a single break point in the comfortable straight sets win. And don't forget, Tennis Channel's daily live coverage from Miami all starts at 11 a.m. Eastern. I'm Erin Coscarelli.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This equity market doing okay in the face of a very messy bond market. Equity futures unchanged. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue, a messy bond market.
The yield curve is inverting in certain places.
The 5-10 is inverted.
This potential inversion of the two standards.
It's not great for equity markets.
Whether or not we're going to have inversion in the U.S., the potential for recession is growing more and more. The yield curve can't tell you a recession's coming.
Curve inversion is kind of your canary in the coal mine.
But the timing is crucial. A lot of money can be left on the table.
The Fed is late. The Fed knows it's late. And now we're going to make a policy error trying to fix the problem that they should have tried fixing last year.
What central banks are doing sadly can only work with demand destruction.
It's hard to see how they will manage to bring down inflation without participating to some demand destruction.
It's really growth in the end that equities are making a claim on, and I think that's the biggest risk.
This is what this sort of yield curve is trying to infer.
Joining us now to discuss Bowersock Capital's Emily Hill, Invesco's Alessio DeLongis, and TPW's Jay Pawlowski. Emily, to start with you, have you been surprised by how well this equity market has held up in the face of significant volatility in this bond market?
You know, I haven't. I think the market was oversold last week. I don't think this is the end of it by any stretch. But I'm not surprised to see a rebound. I think that the investors are accepting the fact that we're in for a long, drawn-out conflict in Ukraine, and that at least for U.S. markets, we're more insulated than perhaps people feared. I don't expect this rally to continue, but I wasn't surprised to see one last week.
Alessio, what about you? Stocks up 1.8% last week. The two-year yield this month and last week, absolutely surging.
Yeah, the issue with the yield curve inversion is really about timing, right? We need to be very, very careful. The yield curve that really matter in the literature as a signal for the end of the economic cycle is the Fed funds to 10-year or the 3-month to 10-year, right? Banks borrow from our deposits and they lend in the long term. And that yield curve has actually steepened meaningfully to over 200 basis points. Now, that is not going to be the case at the end of this year. If we are budgeting for 50 basis points hikes in the next 4 meetings, that's how the yield curve will invert very quickly. Now, the real answer will be in lending standards and credit growth. We need to see, and there's a long delay there, we need to see that tightening in financial conditions really begin to filter through the monetary transmission channel. So timing is the issue. I don't think that here today is the time where you can safely be underweight equities. Our preferred strategy is to actually be underweight credit here and barbelling this strategy while being long duration and long equities. Let's remember, from a capital structure standpoint, credit investors sold upside to equity investors. That's the barbell that we like at this stage.
Equities have been higher, not lower. Credit spreads have been tighter, not wider. Financial conditions have been getting less restrictive, and this is the point Citi have been making. They've come out with a major call, a 50 basis point hike at the next meeting, another 50, another 50, another 50, and then 225 to close out the year. That's a huge amount of tightening that we could see if Citi is right. And Jay Pawlowski, this is what they've actually got to say on equities, and I think this is important. Equity prices are roughly unchanged, a sign the policy path being priced is not yet being interpreted by markets as overly hawkish. Can you weigh in on that, Jay? And do you agree with that line from Citi?
I'm not really sure what it means, John, to be honest with you. Sounds a fair bit of gobbledygook. I think markets are sniffing out growth, and the talk about stagflation, the talk about recession is just completely misplaced. We're going to have well above trend growth, pre-COVID trend growth, in both the U.S., in Europe, in Japan, over the next, not only 2022, but 2023. And I think that's what Rising bond rates are telling you. That's what rising stock prices are telling you. That's what rising commodity prices are telling you. And not just the oil and wheat, but iron ore, copper, the things that go into growth and consumption. And let's remember, JP Morgan pointed out that once the yield curve inverts, the S&P averages 15% up over the next 12 months. So the yield curve inversion, and there's many different versions, as we've already heard discussed in the program today, does not suggest that equities have to start going down. I think we're headed for higher equity prices and better growth than people expect.
Jay, can I put that quote up again, and can you tell me specifically what about it is gobbledygook? Can I read it again? Real yields will need to rise further to slow house price increases, restrain demand, and meaningfully reduce inflation. Equity prices are roughly unchanged, a sign the policy path being priced is not yet being interpreted by markets as overly hawkish. What about this doesn't make sense?
Yeah, the last bit, John. The equity price is roughly unchanged, et cetera, et cetera. I mean, policy path priced in, interpreted as overly hawkish. I guess so, sure. We can all say those things. I think it's simpler than that, I guess. I guess I'm in the keep it simple, the KISS camp. Keep it simple, stupid. And to me, rates, stocks, commodities are telling us growth is going to be better than expected. And we shouldn't fear a recession. We shouldn't fear stagflation. The end of COVID is more important than the impact of the Russia-Ukraine war on global economic growth. And that's what's going to be manifesting itself in the next several quarters.
Emily Hill.
Real interest rates are negative and earnings are going to be better than expected.
I want to get Emily Hill's reaction to that too, Jay. Emily, do you agree?
Well, I do agree with Jay that people are overreacting to yield curve inversion. The correlation between yield curve inversion and a recession has broken down over the last 10 years. And we have to remember that the U.S. Treasury has been buying massive amounts of bonds on the long end and depressing that long rate. And we've been so close to a zero bound that I think it would be very difficult for the Fed to raise interest rates or begin tightening without a flattened or inverted yield curve. So the U.S. economy was so strong going into this Russia-Ukraine conflict that I think it's more resilient than people are anticipating. And we have to remember, when you look back at past, historically at past rate hiking cycles, 1994, 2004, 2015, we really end up with a range-bound market, not necessarily, or we can end up with a range-bound market. And so I'm much less pessimistic. I tend to side with Jay here.
23 minutes away from the open with equities down almost 1/10%. Huge moves in the bond market earlier this morning. A lot of those fade, but 5s versus 30s inverting for the first time, going all the way back to the mid-2000s, 2005, 2006 to be precise. Katie Lyons has the stats for you. Hey, Kaylee.
Hey, John. Well, it's not just big moves this morning. We have seen monster moves across the curve in the U.S. this year. When you put it all together, 3 days out from the end of the first quarter, Treasuries are on pace for their worst quarter ever, up 70 basis points plus across the different durations. Of course, the more dramatic movement has been in the short end and in the belly as the market has repriced that hawkish Fed and expects another 200 basis points of tightening this year. We've seen the 2-year yield up 158 basis points to 231, the 5s up 128, the 10-year up about 94. And of course, as this happens, as you alluded to, the curve has started to invert. We were seeing already that happening in the belly out to 10s, then overnight that 530 spread inverting. And when you look at the 230 spread, that has narrowed now for 6 months in a row at its narrowest in almost 15 years. Well, the spread between 2s and 10s, which everyone is watching closely, is in and around 13 basis points. Is that signaling a recession to come? Maybe your guests are skeptical of that this morning, but still, it's a conversation that's being had. And finally, I would note this isn't just a U.S. story. Bonds around the world are reeling. That includes Japan, where the 10-year JGB yield is north of 25 basis points. That is the top end of the BOJ's range, leading them to that unprecedented move of intervention overnight, reinforcing the idea of policy divergence between Japan and the rest of the world. But when you put together Japan, Europe, Treasuries, it all adds up to a global aggregate bond index here at Bloomberg down 7% on the year, which is a record drawdown, John.
Kelly, thank you. Jay, I've got a quote for you that you won't think is gobbledygook because I know you agree with them. It's JP Morgan. I'll read it out for you. Here's the quote. Real rates are staying very accommodative, which tends to go against the recession trade. They go on to say they average positive 200 basis points at a time of past curve inversions versus current negative. One doesn't tend to have a recession from the starting point of outright negative real rates. Jay, your thoughts?
Not a gobbledygook at all, John. Very straightforward. Negative real rates, no recession. Stocks can do well. Earnings can do well. And look, this is a golden age of asset allocation, as Kelly just pointed out. You know, bonds are having a record drawdown. Commodities, the Goldman Sachs Commodity Index is up 40% year to date, and stocks are chopping around, not really doing anything. But there are multiple opportunities across assets around the world, and with negative real rates and growth being above trend, I think we're going to have growth well above trend. Trend growth in the U.S. and Europe was roughly 2% pre-COVID. We're going to have growth around 3% in both and 3% in Japan. So the bulk of the developed economy, John, are actually going to grow significantly stronger than pre-COVID, and yet earnings expectations are in the single digits. I think earnings are going to be easy to beat. We have a very low bar through the rest of the year. Again, not just in the U.S., but in Europe and in Japan, as well as in the emerging markets.
But Alessio, just to finish with you, isn't this the point? Just to try and give the other side, the other view of all of this. Everything Jay is saying is precisely the reason why this Fed can move and move more aggressively. And the fact we have negative real interest rates is actually an issue for this Federal Reserve. They have to do something about it, don't they?
Yes, certainly. Look, the developments that we're seeing in the cost of production due to commodity prices is only likely to reduce further the equilibrium real interest rate, right? So I think focusing on real rates is somewhat deceiving at this stage, because the Fed may have to raise interest rates trying to bring real rates to zero, but that's really not the point. We need to see inflation expectations. Inflation expectations will tell us when the Fed has done its job, and the equilibrium, the terminal rate may still be consistent with a negative real interest rate. I think that the real interesting thing about the discussion, and I really agree with Jay, is that the risks, the tail risks of the current outcome are widening. The current economic and market condition by itself is not really sustainable, is it? We are either going to get a resolution in terms of rallying bond yields because the Fed brings inflation back in control and by pricing in slower future growth, or equity prices reaccelerate. In my mind, that's really the barbell. And you're not really compensated to be in credit at this stage. And credit markets are going to be the asset class that is going to tell us, in my opinion, when the Fed has tightened enough.
Alessio, Jay, Emily, sticking with us, about 20 minutes away from the opening bell with your movers. Here's Abby.
John, well, U.S. futures right now, stock futures doing very little. But to the downside, we have Apple and some of the Apple suppliers. After a 9-day, 16% rally, Apple is lower. This, of course, after the Nikkei reports that the iPhone maker may cut low-end phone production by 20%. This as demand slows in the war in Ukraine and the plant closures in Shanghai. And, of course, it is hitting some of the Apple suppliers, those chip makers such as Skyworks Solutions, also down 1.5%. Speaking of down, ExxonMobil down 2.5%. This, of course, in sympathy with oil, now down more than 6%, in part as a reaction, a continued reaction to that parabolic uptrend. But also, China has closed another big city on COVID precautions. It's not all down, though, John. Tesla up 5.1%. I know you love these stock splits, but they are talking about another stock split. Since the last one back in August of 2020, the stock is up more than 80%, even though, of course, as you know, it's all optics, having nothing to do with the value.
Just in case anyone thinks that I actually do love these stock splits, I don't love these stock splits. Abby, thank you. Coming up, one line from President Biden drowning out a week of diplomacy.
For God's sake, this man cannot remain in power.
That conversation up next.
When you think space, you probably think One space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
We will have a different future, a brighter future, rooted in democracy and principle, hope and light, of decency and dignity, of freedom and possibilities. For God's sake, this man cannot remain in power.
And just like that, a major headline. And then the administration had to walk it back. Secretary Blinken offering clarification.
As you know, and as you've heard us say repeatedly, we do not have a strategy of regime change in Russia or anywhere else for that matter.
Team coverage starts right now with Bloomberg's Anne-Marie in Warsaw. I'm Maria Tadeo in Berlin. AMH, in many ways, a smart comment from Secretary Blinken, not contradicting the president, but saying, clarifying, we don't have a strategy for it.
Yeah, he's not saying the president didn't mean what he said. He's just saying we don't have a strategy that is going to implement or try to implement regime change out of the Kremlin, Jonathan. But what you have seen over the weekend is the White House actually trying to clarify what the president meant. Because the second he said that, the questions from the journalists directly to the White House, and I was there at the speech, there were White House aides, were immediate. What did the president mean by this when he said this man, Vladimir Vladimirovich Putin, should not remain in power? Is he signaling that the U.S. does want a regime change? The White House says that is not true. The president himself said, no, that's not what he meant. He was not signaling that. But Jonathan, it has caused a bit of urgency here around the capitals in Europe. They want to make sure that this does not escalate what is going on. But we should note, the Kremlin has already thought this. President Putin has said to himself throughout the years, in 2011, most notably, when there was protests on the street in Russia due to his long reign, he said a lot of this was due to the United States. He also blamed the U.S. for the protests during the Orange Revolution in Ukraine. So for the Kremlin, this is really nothing new.
Maria Tadeo, you'll be catching up with the German finance minister a little bit later today. Walk me through what we can expect from that conversation and how some of this is playing out in Germany today.
Well, first of all, Jonathan, just to echo what Anne-Marie said, for a lot of officials in Europe, in particular here in Berlin, but also in Brussels and Paris, they do feel that this kind of language is not constructive. What they say is that, of course, it plays directly into Russian propaganda, that this is not about Ukraine or the people of Ukraine. This is about having a different government in Russia, getting rid of Vladimir Putin because he is strong and he is the man that fights for Russia. That is the line that we hear repeatedly on Russian primetime TV. So, of course, a lot of this played into that. If you also assume that the goal here is diplomatically, because remember, all of them have agreed that they don't want to fight on the ground. They want a ceasefire and a pullback from these troops, then calling perhaps Vladimir Putin a butcher does not help the diplomatic effort. Now, when it comes to the German finance minister, Christian Lindner, we are going to be having a conversation about 3 hours. There's a lot of questions for him. But in particular, what I want to hear from him is a response to Russia saying, okay, you don't want to pay rubles for gas. That could have an impact on the flows. Germany says it's ready for that scenario. If Russia were to cut gas, they say we are ready for every eventuality. But I want to hear in detail, how is Germany going to deal with this? The other big question that I want to hear from Christian Lindner, of course, is how are you going to stimulate this economy? I can tell you in Berlin, there's a big conversation about stagflation. The government is already worried about the inflation fears that kick in the society. Remember, this is always a big talker in Germany. Inflation is something they really care about, and they care about about it passionately. So, of course, those are the two big issues I want to focus on. What is Germany going to do to stimulate this economy, healing from this fallout from the war in Ukraine? And then two, how do you deal with Russia if they make through on this threat that if you don't pay rubles, then you're not going to get any gas?
Looking forward to it. Maria, a fantastic conversation coming up next. A little bit later, Maria Tadeo and AMH over in Warsaw. Emily Hill, Alessia DeLongis, Jay Poloski still with us. Jay, if I looked at the market in Europe, equities fully recovering through this invasion, bond yields through 0.50 on a German 10-year and threatening to go through 0 on 2s, I'd be thinking European recovery, not the recession that some people are looking for. What say you?
You'd be right, John.
Does that make sense? Isn't there some tension there?
No, I think it makes perfect sense. You know, it's my view. We talked about it several weeks ago. We talked about buying European banks. Happy to say they're up about 15% since we last spoke, and I think going considerably higher. I think the real news, John, in terms of the Ukraine and Russia was taken off the headlines by President Biden's comments, which was that the Russians are now narrowing their focus to the Donbass, and I believe that's a prelude to negotiations. They're effectively giving up their initial plan. And importantly, that press conference was A, led by the generals of Russia, not by Putin, and B, was shown within Russia as opposed to blasted out for Western consumption. So I think time is not Putin's friend. The market has discounted the Russian invasion, much as it discounts these types of conflicts within about a month. And look, we just had the PMIs come out for Europe last week. They were much better than expected. Europe is going into this with a head of steam, and that's before we get to deal with the end of COVID or the ebbing of COVID. And so to me, I remain constructive. I think Europe emerges from this situation. The European Union is going to emerge from this in a much stronger, much more compelling place to do investment and doing business over the next 3 to 5 years. It's a tactical and strategic investment opportunity right here.
Emily Hill, you agreed with Jay's earlier comments. When it comes to Europe, can you be that constructive there?
No, in this case, I'm sorry, Jay, I'm going to have to part ways with you. I do think, to your original comments about, 3% GDP, et cetera, I think we have to recognize that these rising geopolitical risks are not going away. And yes, I do think that the possibility for some sort of negotiation or some successful negotiation has increased in the last couple of weeks. But I think Putin is dug in, and we have to remember that Ukraine is a democracy, and Zelensky is talking about some kind of a referendum to allow a declaration of neutrality, which would take 9 months to a year. And we have to, and the impact, therefore, on commodity prices is going to be prolonged. And then in addition to that, we have to look at how China is figuring into all of this. So I'm less optimistic. Yes, I was surprised by the numbers coming out of Europe last week, that they were a little bit better than expected. And I'm not predicting a European recession yet, but I think the European economy will struggle. I think this will have a more prolonged impact than you think.
Don't feel bad about this, Emily. Every time Jay comes on, he's pretty lonely when we get to Europe and the outlook for the continent. Jay Poloski, Emily Hill, Alessia DeLongis sticking with us. Coming up the morning calls and later, Apple falling after Nikkei reports that the firm plans to cut production because of lower demand. The stock is down about 1.5%. That conversation just around the corner. From New York City this morning, good morning to you all. Equity futures down about 0.1% this Monday morning. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA. is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
There is almost a relative calm in this equity market on the S&P 500, essentially unchanged, even with all this volatility in the bond market. If you get to the bond market, 2s, 10s and 30s, I'll run you through earlier this morning. 3s, 5s, 7s, those yields above 10s, above 30s, briefly. But that was the story, just inversion throughout the curve. We'll get into a little bit more of that around the opening bell. That's the price action here at the morning calls. Let's kick things off with JP Morgan upgrading DEER to neutral. Now seeing an improving risk reward with healthier channel checks. Your second call from Morgan Stanley downgrading Citigroup to underweight, pointing to a lack of near-term catalyst. That stock down 0.7%. And RBC downgrading Altria to sector perform, growing concerned about the company's exposure to lower-income consumers amid rising gas prices. Coming up, Apple's 9-day winning streak in jeopardy. Nikkei reporting that it's planning to cut production because of weakening demand. That story up next.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? combustion engines get electrified.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
23 seconds away from the opening bell in New York City this morning. Good morning. Equities, no drama so far. On the equity market, the S&P negative, a little more than 0.1%. On the Nasdaq, essentially unchanged. Following a decent week of gains on the S&P, a week of gains of about 1.8%. Switch on the board and get to the bond market in the face of a move last week of more than 30 basis points on 2s and 10s. Your 10-year yield right now down a basis point to 2.46. Euro dollar, a break of 110, 109.56. We stay below that level, down about 1/4% on that currency pair. And look out below on crude this morning. I think you need to look out over to Shanghai. We'll talk about that in a moment. 106.14, call it 16 on WTI. We're down about 6.8%. At the open, essentially unchanged on the S&P 500, 25 seconds in. Energy, bottom of the pile, speaking to what's happening in the commodity market with your movers. Here's Abby.
John, well, with this basically flat open for U.S. stocks, let's take a look at two leaders and two laggards. The leaders are Tesla. One of them is up 4.9%. This, of course, as the company is proposing another stock split, all about optics, making it more attractive to retail investors. This worked back in August of 2020. The stock is up more than 80% from that stock split. Riot Blockchain up 6.5% in sympathy with both Bitcoin and Ethereum higher. Plus, the stock has been trading a little bit like a meme stock, and those meme stocks doing really quite well recently. To the downside, though, not surprisingly, you were just talking about oil down more than 6%. This, of course, as a city in China has been shut on COVID precautions. Occidental Petroleum down 3.2%, Transocean down 5.4%. And I would also share, John, that taking a look at the technicals, it looks like oil is doing another reversal from that parabolic uptrend, perhaps going back down toward its 50-day moving average, John.
Abby, thank you. Great work as always. About 1 minute and 30 into this, 90 seconds. Apple, the stock to watch, down a little more than 1%. This putting potentially the 9-day winning streak into Monday in jeopardy. Nikkei reporting the following. Apple plans to make about 20% fewer iPhone SEs next quarter in one of the first signs that the Ukraine war and looming inflation have started to dent consumer demand. Taylor Riggs with us today. Hey, Taylor.
Hey, John. You know, it's so difficult to always be careful with these reports because we've heard this story from Apple before. They guide us slower a little bit when it comes to some of the production, but they always manage to get it done when it comes to the quarterly reports. Nonetheless, this is the report and we'll talk about it. Cutting demand, as you mentioned, by about 20%. We're on the lower end of those smartphones. Yes, you mentioned some of the rising inflation. You also mentioned maybe some of the sentiment from the Ukraine war. So indeed, hearing that maybe they will be cutting it down just a little bit. And you mentioned that 9-day winning streak. I mean, you're up, what, 11, 12, 14% or so in the last 9 to 10 days. So really a huge winning streak that they're on. Let's talk about the breakdown of some of the sales, John, because when they talk about wearables as well, they're also looking at maybe cutting orders for the AirPod earphones. That may happen by about more than 10 million units this year. Again, AirPods have really become sort of a key wireless story here, right? When you also think about not only hardware, but some of the services and sort of a big growth sector for the company. So it's not really just the iPhone, but also taking a look at the AirPods as well and what some of those production cuts might mean. At the end of the day, John, though, it always comes back down to the performance. And Apple has been the big outperformer when it comes to the S&P 500 in the last year. You also think about what that means in the backdrop of yields rising, 75 basis points or so when it comes in just this year, really. So you think about sort of the contribution that this has had and sort of, at least for now, the big outperformer.
Taylor Riggs, thank you. As Taylor said, and put it well, how many times have we heard stories like this only for Apple to knock it out of the park? But is there something to softer demand off the back of weak consumer confidence because of what's happening with prices? Mitch on Friday came out with another read of decade-low consumer sentiment, and this was a quote from the survey. When asked to explain changes in their finances in their own words, more consumers mentioned reduced living standards due to rising inflation than any other time except during the 2 worst recessions in the past 50 years. Emily Hill, Alessio DeLongis, Jay Poloski, still with us. Emily, to you first. And from a stocks perspective, are you starting to think about how higher prices will curtail discretionary spend in America?
Yeah, I think that's really the primary risk, one of the primary risks to the optimistic case for a range-bound market in 2022, right? I mean, consumer demand is critical for propelling this economy. And this rock bottom, it's actually been a surprise that this rock bottom consumer sentiment has not translated into lower consumer demand. I think that's partly because consumers still have a lot of money on their, in their bank accounts from spending less during the pandemic and all of the stimulus. But at some point, that's beginning they will spend that down. And I do think if we see a drop in consumer demand, that could be a problem. And, you're obviously seeing this more, or you are seeing the decline in sentiment more for consumers that are making over, say, $100,000 a year. So there is a little bit of a bifurcation, but that is definitely something to watch.
Alessia, how are you thinking about the same dynamic?
You're highlighting a very, very critical point that has dominated our thinking around the economics and markets interaction for the last 6 months, the issue of demand destruction and consumer sentiment. The way we are tackling this is to really focus on the defensive side of the equity market by being overweight low volatility and quality stocks, right? We just spoke about Apple. Apple fits exactly that type of description, right? We are concerned about the slowdown. Jay is absolutely right. Growth is likely to remain well above trend, but it is slowing. And in that type of environment, we argue that being overweight stocks is still the right strategy, but being overweight the defensive side of the market, so low volatility and quality stocks. That's where we expect that correct balance of defensiveness while maintaining a long posture into the equity market.
Music to Jay's ears. Jay, you're absolutely right. Walk me through it.
I never hear that at home, John.
I know, I'm sure you don't. The level and the rate of change. Jay, let's talk about that. The level you're saying is going to be good. You've got Alessio there talking about the fact that we're going to be slowing this year. I remember people talking about peak growth through the back end of last year, and I guess things picked up again. But Jay, how do you think about that?
No, I think that's absolutely correct. We've talked about it quite a bit at TPW Advisory, the difference between slowing growth, because clearly we're slowing from the stimulus growth of 2021, but not slow growth, right? So we're going to be above trend. And it's natural that people have a hard time understanding kind of that distinction in real time. And when you get consumer numbers like the Michigan survey, it's definitely worrisome. But then the reality is, you look at retail sales, you look at other issues, consumption remains pretty robust. But one of the things it does for us is it sends us to look abroad. And we talked about the golden age of asset allocation and the policy mix outside of the U.S., whether it's Europe, ECB on hold, lots of fiscal stimulus through next gen, whether it's Japan, big fiscal package coming, currency is at a 50-year low in effective terms, whether it's China, where the PBOC is easing. There are other parts of the world, John, where the policy mix is much more supportive for equities than it is in the United States. And so we have been and continue to be underweight U.S. equities versus the rest of the world, and think the opportunity set, particularly over a 12 to 24-month view, is much more attractive outside the United States.
I find this point really fascinating, and it's an original one for some people. Alessia, this idea that the policy mix outside of America is more favorable to equity markets than the policy mix here in the States.
That is clearly an important driver of performance year to date, despite everything that has happened. I mean, let's take a step back. Since December, January, when the escalation of the conflict has taken place, emerging market equities, developed market equities outside of the U.S. have actually matched the performance of U.S. equities, despite everything that has happened. We're not seeing outsized dollar strength, quite the opposite most recently. And another proof